will be joining very shortly. From 10B class 33 to class 49. We are breaking for lunch around 1:50. The third session will be live cases of the problems working out, and the fourth session will be question answers, wherever we have a lot of practical questions where you can clarify all the doubts with the eminent speaker. One more thing is we have a lot of changes in recently with respect to Chartable Trust and notifications, where we are facing a lot of problems when we are filling the forms and even informing the client also sometimes becoming very difficult task. So I request all the members to make use of SAR's experience, and I request SAR also to enlighten more and more relevant topic on the members for their practical purpose. Before that, I request Carmen Chamaragaru to introduce today's speaker, please.
Thank you, Chairman. Our dignitaries on the dais and fellow members. Good morning to one and all. It is my pleasure to introduce today's speaker, Dr. C.A. Palgun Kumar. He is aged about 68 years. Though he is 68 years, he is very young. This is a topics he will select like that. He will deliberate to the members. He's such a passionate. And he's a practicing chartered accountant at Tirupati since 1979 for the past 44 years. As managing partner of E. Palgun Kumar & Co. He's married to Srimati Vijayalakshmi, who is a Directorate in Home Science and worked as principal of TTD College. They are blessed with 2 children, son and daughter. Both of them are qualified CAs practicing with the father. Daughter-in-law is also a chartered CA practicing in this form. He is a classical future player also. So, see, I would like to mention one more thing that is relevant. That's why I'm mentioning. Our Aniket Sunil Talati, president of ICI, he's 3rd generation chartered accountant. His grandfather chartered accountant. His father also chartered accountant. Now he's a chartered accountant and our president. Why I'm mentioning here, our Palgun Kumar. He's a chartered accountant. His daughter is chartered accountant. His son also chartered accountant. And his daughter also chartered accountant. We are very, very happy, sir. The passion about the profession you have, I feel very, very happy on this occasion to introduce like a person like you. His educational qualifications are MA, MCom, MBA, BL, DISA, PhD. He is a member of Institute of Company Secretaries of India also. He is a qualified independent director, IIC of MC of Government of India. He was appointed as a member of Board of Studies of SV University and also SP Mahila University for the period of 2012-14 period. He presented more than 450 technical papers, 450 technical papers in income tax in the past, in various CP seminars, in all the 4 southern states CA branches. On GST, he has delivered more than 50 lectures across southern India. Most of his video lectures are viewed in YouTube. You can view that all the lectures. He got his PhD in accounting and auditing standards for non-profit organizations from Sri Venkateswara University, Tirupati. He is servicing the society as trustee and executive member of several charitable institutions at Tirupati. He has been appointed as a finance committee member for 3 years, 2020-23 of IIT Allahabad, UP. He was a member of the Southern India Regional Council of ICI from 2010 to 2019. He was chairman of Southern India Regional Council for 2016-17 year. He is appointed as a member of AP State Regional Direct Taxes Advisory Committee for 2023-24 and 24-25 years. He is appointed by CBDD as member of the Direct Tax Advisory Committee for the Andhra Pradesh state for 2 years with effect from 1/4/2023. This is the brief profile of Palgun Kumar. And one more, as a SICASA chairman, the conference is going to held on tomorrow and day after tomorrow at Self-Kala Vedika. If all your articles possible, if possible, please requesting for registration, because there are 12 paper presenters. They are going to showcase their talent of the students. I humbly request all the members, if possible, because this is a hard time because it is a tax audit season. It is a bit difficult to all the members to spare articles to a time, but being second Saturday and Sunday, so anyway, one day is Sunday. So I humbly request, please registrations, if possible, cooperate to the branch. This is my humble request. With this brief background, and our Palgun Kumar, see the 450 seminars, it's not that much simple. Across India, throughout the nation, such a great personality is in front of you. I thank you once again, sir. It is over to you, sir.
Thank you, Garmanch Ramarao garu. You so passionately introduced today's speaker. Really love you. Thank you. With this, we are handing over the session to Palgun Kumar, sir, without much wasting members' time. Sir, request you to take forward the session. We are there at any point of time, sir. Please. Yeah.
Om Namo Venkatesa. Esteemed Chairman of this illustrious Hyderabad branch, Regional Council Member Sunil Mandava, committee members, illustrious past chairman, including past committee member Prakash Chakraji, senior members. I feel some of them are students instead of the members also. Some students should have come. Any student here, please? Yes. So 5, 6 students. So dear students, a warm good morning to all of you. Come. Chaitanya, you can see. Normally, the biodata is given by the speaker to the branch or any organizers to introduce, not that they have drafted or invented. So whatever we give, generally we give a rosy picture only. We don't give the other side of the. So they also try to add some more color to it and then present it in a beautiful way. There is one speaker throughout India, Dr. Girish Ahuja, who so far, now 74 years, who so far 2,600 CPE seminars he addressed. So there are giants who crossed 1,000 also. So it's only purely passion. Maybe for the students who are not that familiar, we have to say, for attending the CPE seminar, except the most audible claps and one small memento they give, whether brass or glass or something. Except that nothing, no consideration will be there. No consideration, either in cash or kind will be there for students. So only out of the passion, people are sharing their knowledge. So I am also to keep this holy lands tradition that first 25 years learn, next 25 years of age, and then after 50 years, last 25 years, you spend what you have earned and learned to the society benefit. That is the culture of this Hindu tradition in India. So as part of it, I started sharing till the age of 50, restricted to my office only, not one day I stepped up. So after that, keep the tradition. So as part of that, the latest change we were having till 1970 under the Income Tax Act, no registration, automatic charitable and religious institutions, automatic exemption was there. That automatic exemption was converted into registration, some conditions. The conditions have been till 2010 or say 2013, some conditions only were a little bit to be satisfied to avail the income exemption. But in the past 10 years, this particular religious and charitable institutions, public religious and charitable institutions exemption has become so tough. Why? Because the greed among the public who earns some money, rightly or wrongly, they want to avail this exemption some backdoor method. Thereby the government is forced to amend these sections. So the amendments have become so complicated. In spite of it, for 2022-23, the audit reports prescribed, the Form 10B and 10BB were so simple, maximum 3 figures. What is the gross income? What is the income applied? Is there any accumulation? That's all. That was up to 22-23. Though the act is amended. But now from 23-24, the audit report 10B, 10BB, names only are there. That is the title 10B, 10BB, same title is there. So as usually the saying, old wine in new bottle will not apply. The old bottle, new wine is there in these two audit reports. So only the farm name is there like that, but the contents are not necessarily restricted to these exemptions. Beyond that also the amendments are there in this audit report. The auditor is supposed to, just like you're on Form 3CD, though it is prescribed under 44AB, in Form 3CD you will find something extra questions, not only necessarily to business. Capital gains 45.2, I think Form 3CD class number 14. So it says, is there any income taxable with relation to section 45.2, the capital gains deemed conversion of a personal estate? So like in 3CD, what you have in this 10B and 10BB also, in addition to these exemption sections, some clauses are there which are not necessarily related to these exemptions, with relation to some penalties also. So these are all the things. So the as auditors, for us to file this 23-24 return of income, sorry, the assessee will file the return of income. Before filing the return of income itself, the registration or approval under 1020C we call it approval, under section 12AB we call it as registration. This registration or approval is a conditional one which is specifies several conditions. As we have seen for 22-23 as material itself for the first time, up to 21-22 without any renewal, without anything, perennial continuous exemption was being enjoyed by these institutions. Whereas for 22-23 we have seen that a fresh registration or a re-registration was made mandatory. So those existing earlier had taken the registration. At the time of registration, they included conditions. Initially in 2021 and early 22, they used to append 18 conditions, and by a CBTD circular, they restricted the conditions to 11 only. Nowadays, whenever you find the renewal or registration, you are getting only 11 conditions instead of 18 conditions in the form 10AC or 10AD, the registration. Those conditions are one of the conditions. The audit report shall be filed, the return shall be filed to exemptions. Those conditions before conducting the audit are most essential for one to read. Because as auditor also, when you are certifying the exemption, you have to be careful. What are the conditions? Whether every year you have to read the conditions, every year you must say, yes, these conditions are satisfied. Now, the religious and charitable institutions, the complication why it has come, some peculiarities are there. The peculiarities are in the case of other than trust, we are all accustomed to, our mind is conditioned. Human brain, before birth itself, by genes, 50% mind is conditioned. Science says, psychology says, 100%. Our mind before birth itself is conditioned because that condition is necessary for survival. The nature has given that. The remaining 50%, in the circumstances we grow, in the situations where we react, our mind is conditioned, the remaining 50%. So normally, as auditors, under the Income Tax Act, a normal computation predominantly makes our brain think in one way only, in one direction only. Computation under the 5 heads, total income, tax arriving. Maybe some few sections are there, special rate sections. Mostly now, after demonetization, the most predominant section every day one has to read is 115 BBE. So every notice, every assessment, is there any 115? Because it is a special rate, 60 plus 15, 70% rate. Every income tax officer, a single authority, tries to see, is there any 115 BB special rate? So the most predominant, like that in 115, several rate, special rate sections are there. But when you come to the trust, the trust now, especially 22-23 itself to some extent, from 23-24 especially, in a peculiar way, you have to compute the income. Earlier audit reports up to 22-23, you are not certifying a figure of exempted income or taxable income. I repeat, up to 22-23, when you are dealing with the audit of these registered exemption claiming, 1023 is called as first regime, section 11 exemption is called as second regime. For claiming this exemption, we were not certifying, auditor is not certifying what is the exempted income, what is the taxable income. Auditor is not certifying. Audit reports. Part A, true and fairness of the financial statements. Part B, gross income, income applied, income accumulated, if any. Or in the second part of Form 10B, are there any transactions with the specified persons? Specified persons, as far as these charitable institutions or public institutions are concerned, the related parties like that. Nowadays, in all the acts, related party transactions. So for these trusts also, trustees or founders or the executive members or the substantial donors are all the related parties. So transactions with the related parties, otherwise known as per the specified persons, as mentioned in section 13.3, or as transactions illustrated in section 13.2, and any violation under 13.1c has to be mentioned in the audit report earlier. But now the audit report specialty compute the taxable income, compute that exempted income, you certify in the audit report. So even under 44AB Form 3CD, you are not computing and certifying the business income. Only under the business head disallowances, mostly the focus in 3CD is what are the disallowances applicable for the assessee under the business head. That is the focus as far as the tax audit is concerned. Disallowances under the head business. You are not computing the business income. Whereas here, the new audit reports for the tax are saying compute the exempted income, compute the taxable income. Is it only one taxable income? No. For these trusts, there are 6 types of taxable income. So that is the peculiarity. I am driving home the point in the introduction itself that our exercise today is in this workshop, how to compute those 6 types of taxable income in different situations. Problem is one, but computing is under different sections, different computation of income, taxable income. That is the exercise which we are going to do today. So the computation of income, which the auditor has to certify, not the assessee. Assessee will declare in the return, ITR 7, for those who claim the exemption. In the ITR 7 is prescribed for not only for this non-profit organizations who claim 1023 CR Section 11 exemption. For several others, the same ITR 7 is there. In the ITR 7, if you go, all the 4 heads income will be there, except salaries. The other 4 heads income, house property income. Whereas the exemption, registered exemption claiming provisions is a separate code by itself in the Income Tax Act, not 5 heads. But in the ITR 7, you will find the heads: business income, house property income, capital gains. They are applicable for others. For example, a municipality is liable for tax, for example. 1020 exemption is there. In spite of it, in some circumstances, it has to pay the income tax. They have to use ITR 7. Or a scientific research institution from Section 35 exemption claim. So the ITR 7 is applicable for so many people. So simply seeing the ITR 7, you should not jump to, one should not jump to compute the income under the heads, because this is a separate code by itself. Or one extreme example, yes, a trust which is having 12A registration for 22-23 assessment year, by no violation of any provision, has arrived some taxable income and paid the income tax in the financial year 22-23. I am saying a trust which is having registration, which is enjoying Section 11 exemption, has paid the income tax in the financial year 22-23. Now in 23-24 assessment year, is the income tax paid is eligible as application or not? Sir, no, you say. How many say no? How many say yes? First sir says yes, sir. First bench. Next, anybody else, sir? Yes or no? Right or wrong? Anyhow, God has given 2 hands. Somehow raise 1 hand. Right means allowable means this, no means nothing wrong. How many say? No. No, it is not. Income tax is not an application for the objects, charitable or religious. You say, no, it is not allowable. These madams too. Next, anybody? Yes, yes. Yes, allowable. So, sir says allowable. Number of court decisions. Income tax is also application for objects allowable as application. Number of court decisions, not my interpretation. Why I say? This is the peculiarity. We have to normal mind what it assumes is not there here. In a normal case, Income Tax Act, capital expenditure is not allowable. Income means revenue income minus revenue expenditure. Where is the question of capital? For capital, only depreciation, if at all it is eligible. Last year you would have seen goodwill has become a controversy. Goodwill was allowable, intangible assets were allowable depreciation. Last year they amended, no, goodwill is not eligible for depreciation. Statute. So at best the depreciation only. So whereas here, fully allowable capital. So I am talking about there is a peculiar way of computation. What I want to drive home, that for our normal mind, what is not suitable or say acceptable, here it is a peculiar way of computation. One has to understand this. So this is the importance. So here for other persons, real revenue income, net income is the focus. Whereas here the focus, the Income Tax Act focus is whether have you applied 85% of your income for public purpose. For public benefit, we have given the exemption. Have you applied? That is the focus. Secondly, revenue expenditure only for the normal computation, whereas here capital expenditure is also applied. In these 11, 12, 13, nowhere else section says capital expenditure is allowed. This whole Form ITR 7, the rules and the computation is based on several decisions. The Income Tax Act says income applied. Applied what it means over a period. Courts have held it's not the expenditure incurred. The words are different. So the income applied includes capital expenditure. That's why your ITR 7 says claim. Your audit report says claim. You claim that capital expenditure incurred during the year. Similarly, the whole peculiarity of this is the third point, which we are doing as problems. For a normal person, for a normal computation other than these NPOs or say public trust, normal person, you start with the income and thereby make add less. Then you will arrive at the taxable income. Whether it is the capital gains head, whether it is the business head or house property head, gross rent minus allowable. That's all. Whereas here for this charitable trust income computation, the whole peculiarity is you should have receipts, both revenue receipts, capital receipts. Some revenue receipts are to be excluded. Some capital receipts are to be excluded. Then on the payment side, in the revenue expenditure, some expenditure has to be omitted. It is otherwise known as disallowed. Some capital expenditure has to be allowed. Some capital expenditure has to be not to be allowed. So like this, the computation of arriving of exempted income or taxable income is by eliminating some items, filtering them. What is the gross income means? From revenue receipts and capital receipts, what to remove, remaining is the gross income. And what is to be deducted, applied means some revenue receipts after omitting, some capital receipt payments after omitting. So the revenue payments and capital payments is sum total the income applied. Thereby you will arrive the exact income to claim the exemption. This is the peculiarity. So under which section, what is the method, what is the rule? That is only our focus. So similarly, in the normal business head or capital gains head or house property head also, loss is carry forward. So here, income is carry forward, not the loss being carry forward. If you have income, because the focus is on the income to be applied, 85% you could not apply, you applied only 60%, the remaining 25% shortfall, 85 minus 60. So the shortfall has to be carried forward, maximum for 5 years to apply. So here the focus is on the income carry forward, not the loss carry forward. Loss cannot be set off, loss cannot be carry forward. Or instead of the loss, you use the word excess expenditure, excess apply. If at all you have had excess applied also, nothing to be carry forward. This is the focus. So this is the first fundamentals, if we are thorough, thereby slowly we'll go into the sections, thereby we'll understand. So for a business, normally 90% business people, to have consistency, to have truant fairness. Even the institute says, if you follow accrual system, I don't need to specify anything in the notes on accounts or say, whereas if you follow the cash system, you have to specifically say, yes, this businessman is following cash system. Normally chartered accounts follow cash system. So like doctors, like advocates, professionals generally. Otherwise say under the business service. Whereas here, for charitable trust from 22-23, what the total amendment is, we allow the application only on the basis of cash system. Even in the business head, there is a slight leverage, 43B. before the due date of the filing of the return, even if you incur, it is deemed to have been because you have claimed accrued, but 43B6 items restricted on cash basis, even, but such leverage also is not there for the trust. Purely during the previous year, have you paid? What is the meaning of the word paid? After some time, we will try to know. So then capital receipts normally are not income except under the head capital gains, whereas here capital receipts except the loans borrowings are also income because they are allowing the capital expenditure as applied. So capital receipts per se other than the borrowings are also income. So these are all the peculiarities. So now to whom this form 10B and 10BB are applicable? So I have 70 slides. Now I am in the third slide. I have less than 60 minutes time in my hand. So per minute, one slide I have to rush. So as we are having at the evening last question answer session, simply follow us and then we will answer all your questions at the end. So the new audit reports, to whom it is applicable? So there are two types of audit reports. Whether the first regime or second regime, earlier up to 22-23, you were filing for section 11 exemption 10B and section 23C 10BB. That demarcation is now removed, mixed. They simply say whether it is 1023C or section 11, the form 10B is applicable, which is a bigger one, 49 clauses. This form 10B is applicable whose gross income is above rupees 5 crores. If there is no section 11 exemption, whose gross, if there is no section 11 or 1023 exemption, whose gross income is above 5 crores. How to compute, arrive at 5 crores? A little bit controversy is there, but anyhow, to be on safer side, if your gross receipts are above 5 crores, better you go for 10B is the practical advice. Because if you want to determine and then strictly follow, there may be a possibility of you doing a mistake. So for all others, 10BB. So for most of the numbers, 60 to 80% are 10B only, 10BB only, because it's having smaller category, 32 clauses. And the bigger category is gross income, whose gross income without applying section 1023 or section 11 exemption is 5 crores. Then for them, 10B. And not only that income criteria, next is they who have receipts during the previous year under the FCRA, Foreign Contribution Regulation Act. Registration under the Foreign Contribution Regulation Act is not the condition. Several people may have the registration, but during the previous year, if they have not received any money, no. Receipts, the word, during the previous year, if you receive only, though your gross receipts or gross income is less than 5 crores, for them also, this form 10B is applicable. Similarly, the last condition, to whom this form 10B is applicable, who have applied their income outside India. Who have applied their income outside India. There is one section in section 11, subsection 1, clause C, which says, if you want to apply, because the whole exemption, it is an Indian income to be applied for Indian welfare, Indian benefit, public benefit. But if you want to have some benefit to outside India to be applied, then you have to take the permission of the government, central government. Then only you can apply. So if at all you have taken the permission and you have applied outside India, you have to file the form 10B, not the 10BB. Okay. Now, correct. Yes, under that act, any receipt they said, that act covers the interest, so then also this is covered. That's all. So because we have to go strictly by the words, if that all there is a receipt, deemed receipt, actual receipt plus deemed receipt. So we have to be more cautious. That's all. So now, Ministry of Home Affairs, Ministry of Home Affairs, section 11(1)(c). Okay, FCRA also Ministry of Home Affairs. You are right. I am also saying any income to be applied outside India, you have to apply and get. That applies Ministry of Home Affairs. Okay, so this 49 clauses are not different from 32 clauses. So the 32 clauses in the Form 10BB are repeated elaborately in the 49 clause of Form 10B. So we are today going to cover 10B 49 clauses exhaustively, but we are giving a reference that once we conduct or say understand these 49 clauses exhaustively, automatically the 32 clauses are covered in the 10BB. That's how we say. So now this audit report is the lengthiest audit report. Under the Income Tax Act, several audit reports are to be given by a chartered accountant. Several. For exports claiming income, say 10A, or several audit reports. So our 80AB, Form 10A-C, like so many things are there. But out of all the audit reports, this audit report 10B is the so far lengthiest one, having 49 clauses, and in each class, sub-clauses, questions, around 100 questions are there. So this form audit report is having 29 schedules, not 1, 2, 3 serial number. For every schedule, they gave a name. So like that, these 29 schedules also you have to fill up. So some of the cases, you may not be having the relevance for the schedule, then nil. But you have to fill up the form means you must say whether figure is there or nil, you have to fill up and then file. So this is the Form 10B's peculiarity. So in other words, the form contains right from its registration, the full details it is asking. In fact, we are going to see the heart of this Form 10B 49 clauses. 31 is the heart of the clause. Section clause 31, what it says, what is the income applied? Not one figure. Its subclauses says object wise. So you are having 3 objects, 4 objects. For objects, 8 objects, code numbers there. So for each object also, how much in cash, how much through other modes, that is bank electronic modes. Unless the client, the assessee, maintains his ledgers or is having so much sophisticated software, for these questions, the software, if it is giving the answer, the auditor has to do the exercise and then certify. If the assessee is not, client is not, for how much difficult it is, which we were not doing earlier. Object-wise, cash portion other than cash payments. So because some unscrupulous people claimed this year I received 1 crore donations by cash, all the 1 crore I applied for public charitable purposes, which may not be the reality. That's why this audit report itself is tightening the noose, saying how much you received cash, how much you applied cash, for which object. The auditor has to certify. So this is the difficulty. So the correctness of computation is the specialty. So just a comparison only for a 23-24 assessment year. That's why today we are discussing. If it is 24-25 assessment year, next year, February, March, we would have had it. It is 23-24 assessment year, sir. This is applicable. So, sir is a fond hope. Maybe last minute they will amend it, postpone. Still, sir is have no hope, sir. It's already made mandate. Now, so the clauses. For example, in 10B, what is there in 49 clause? First 1 to 8. Here also 1 to 8. What is that 1 to 8? Name, address, PAN number, registration number. So like that, just casual, just like in 3CD, what you general clauses. These are all these things. So that's why we have given just for your understanding sake, but it's not going to be of any this thing. So these the clauses which are common clauses. So here also clause numbers we have given for just reference sake. If you are say thorough with Form 10B, automatically 49 classes, automatically 32 classes of from BB also you can cover for the stressing that point only. We have given these things. So these are all common. We are going to see each class by class. Today is before lunch, class by class, all the 49 classes will exhaust with its implications. Then we will work out the problems after the lunch. Because after lunch is more important with figure work. So after exhausting the 32 classes, this 49 class means extra 17. What are the extra? So in 10B, these are all the extra. So these are the things which are asked for in 10B additional classes. So these are these things. So these are these things. So then we'll see all the classes class by class. Now the accounts, as I said in the audit report, first part is true and fairness. How do you arrive at the true and fairness? Normally, any method of accounting, cash system or mercantile system, you can arrive the true and fairness. But because of the complications involved, we advise you. Earlier we were advising, without this, earlier up to 21, 22, we were advising the trust means go by cash system only. Don't go by accruals. Otherwise you have to file form 10. You cannot apply. What you have not received, you cannot apply, but you have to see. So the true and fairness, better we advise go by accrual system. Thereby consistency will be there. Your computation will not go wrong. If you follow cash system, by mistake somehow some auditor has done what he is accrued, omitted in his working notes will be there. If new auditor is appointed, what he has omitted accruals, you may not be, you have to do second time exercise. So better for consistency sake, follow an advice, though it's not mandatory. And you cannot have a mixed system. For income accrual system, for expenditure, because they are allowing only cash, I will follow mixed system. That was there in 75 when I was the apprentice. Mixed system was allowed. 145 was not there in those days. So we used to follow mixed system of accounting. That's not now possible. So the notes on account disclosures is more important to arrive the true and fairness. What all the things which you are claiming you have. So as I said, in the 10B or 10BB, the first part is only we have obtained the information and explanations. In reality, he gives or you prepares in the audit report at four places, though just like 3CD, it is a report, true and correctness, it is not a really figures certifying exercise audit. You have to exercise your opinion. For example, the payments made to, or say the benefits passed on to the specified persons, the reasonableness. What is the benefit passed on to arrive at taxable income? So you have to say reasonableness means you have to judge, just like your 40 capital A2 in the business head also. So the related part is reasonableness. The auditor has to certify. The assessee will say reasonable. The auditor is concurring with the same opinion or is differing. You have to certify. So similarly, at other places also, four places, the auditor is, in fact is giving an opinion, though it is a true and correctness. He has to, that means your judgment should be tested one. When the assessing officer questions how you say that they have complied, you must have some documents, some argument, some case law. So without that, merely not the question of filling up this thing. So the first part is true and fairness, because you are saying, I obtained the information and explanations. So as per my examination, the appended details are true and correct. Balance sheet is true and fair. The details given in these classes are true and correct. So now, as I said, 1 to 7, the name, assessment year, previous year, say registered address, other address you applicable, type of the audit. Normally, registered address, where from you will get? In the registration certificate. If at all it is changing, it may have at different. We are going to see class 14, books of accounts maintained, books of accounts examined, books of accounts kept at which place. There are several trusts in India having branches in several states, several places. For example, near Tirupati, we have Kanchi Mutt. Or say you go to this Karnataka, Sringeri Shankar. They are having several branches, in the sense several temples are their institution, religious trust, claiming exemption. But they have several places. So for each temple in each town, they will maintain separate set of books of. You have to mention where the books of accounts are there. Class 14 when you go. So here they registered address. Normally nowadays you would have seen more tax liability, not in the Income Tax Act, GST. 60-70% of the GST registered persons fail to give in the GST portal their place of business. Registered office will be there. A works contractor, wherever he takes work, that address shall be there in the portal, GST portal. Many people fail. Wherever you keep your goods, at least temporarily, immediately within 24 hours, you have to upload. So if you fail to that, GST authorities will notice that and then say, you have not said this is your place. So penalty. So the place of address is also so important. One has to be very careful. So types of auditing. This is also must. Trust, society, company, others. Can anybody tell me what will come in others by their experience? You know what is meant by trust? Indian Trust Act. You know, Societies Registration Act 1860 is adopted by each state differently. So that's so company, Section 8 companies, earlier Section 25. No, what will come in others? Pardon, sir? 1 minute. Association of persons. Sir. Is the association of persons can get fully a registration as it is without having registration anywhere else. Under society, association of person normally under the Societies Act, they will register. Then they apply for charitable objectives. But AOP, as it is, may not come. In some case, majority cases, it will not come. Oh, you're right. You're right. So they are not registered under trust, society, or company. The government promoted non-profit organizations will come under others. There also the government by legislation they will come. Just like that government by GO will not come. By legislation they will come. Without legislation coming, any example? Waqf Act is there. As per the Waqf Act only the document will come. Waqf Act governs. Just like AP is a Telangana Hindu Religious and Charitable Endowments Act, Waqf Act is there. So Waqf Act governs those transactions. Without the act, I want to say. For example, majority of the trusts, the High Court, normal courts, or the High Court most probably under Section 92 of the Civil Procedure Code says, this is a non-profit organization. I am appointing for this property, so and so are the trustees. You have to manage and report every year or every executive meeting, whatever you have, file in the High Court for 20 years, 30 years, 40 years, 50 years. High Court is monitoring those public trusts. So by High Court order, under Section 92 of the Civil Code, several trusts are say being governed now. Or in a normal trust also, trustees are also human beings. So after 4 years, 5 years, 2 groups will be there. One group will file a petition against the other group. Then both of them go to court. It happened in several cases. Not, for example, in Chennai High Court, you would have seen in Chennai Pachappas College. For the past 50 years, the Pachappas College, the Pachappas Trust is governed by the High Court only. So the original trustees, they quarrel. For example, a father having substantially transferred his property, besides transferring to sons, would have transferred to a trust. He asks the 2 sons to manage. These 2 sons quarrel and go to court. Court says, why do you quarrel? I will appoint third party. Please take rest. So, and the court, the other cases will come. Why? Because this clause is having another clause relevance. That's why I have taken some time. So now, clause 8, whether the audit is established under an act or instrument, under an act or under an instrument. So instrument means even by a will, registered will, a new non-profit trust can come. So anything is an instrument. The word instrument is very, very important, because if you see this 11, 12, 13, they didn't use the word person. All through 11, 12, 13, the words used are any trust or institution. Trust or institution. Trust is not defined, or institution word is not defined. What is institution? Only courts have decided this is an institution. That's why what meant by instrument. Instrument is different from deed. So the word deed and instrument are different. You can search for their exact meaning. So if it is not, you have to say that the auditor has to go through the route of this establishment, has to say in the audit report there. At the time of registration itself, they would have seen all these things, but the auditor also has to certify it. That's why I say. So number 9, the details of registration, provisional registration approval. So now earlier there was no provisional regular, no. Now only from 2021, a provisional, a regular. So provisional means generally temporarily they give, and 3 years they give, and within that, if you commence the activity, or if you say want to regularize this thing, then again say 10 AB. So these forms also from next month first onwards are interchanged by a board circular. So the circular number 45 of June 2023, they have changed from October 1st of 2023. The interchange is there in these forms 10A and 10AB. So try to be careful. That's my last but one slide I will give you. Then, so the registration details physically see in the portal and copy, and then try to furnish the details. So this is the format as it is given, just for information sake I have given. So the details under which section, I got the peculiar things almost from several senior chartered accountants. When they are filing this form 10A for registration or approval, earlier for first regime one form 56, for second regime another form. Now both the regimes they clubbed together and they gave subclauses, 12 subclauses for one thing, another 18 subclauses. So which subclause, which section will apply? For example, 12 AB, capital AB, subsection 1, small AB gives 6 subclauses. Under which subclause you have applied for registration? So different circumstances. Form is one, clauses are applicable, section applicable is different. So whether it is correctly applied or not, some people by mistake have applied wrongly. So thereby, at the time of regular registration, when you apply for regularization, at provisional itself you gave a wrong section. I am rejecting the several cases it happened. Even now. For that sake only, CBTD circular number 6, dated 24/5/2023, has extended the date which expired on 25/11/22, which expired now up to 39/23. This month end mistakes several people have done instead of condemnation. Please reapply. Even rejected cases, please reapply. We will give you the registration. A provisional registration which was rejected, on the basis of provisional registration, 22/23 return is filed. For 23/24, when they apply for regular, they are rejected. Now, before 30th September 2023, again you apply, the board circular says, we will give you the regular registration. Thereby 23/24, you can correctly file. So this opportunity one has utilized. So this is the registration details section. When it is asking, be careful, go through the section. It takes a lot of time. The whole parody is these non-profit organizations, the auditors show more sympathy because the people who come are all senior citizens who are for their, say, spiritual benefit, maintain these temples or churches or masjids, and then do charity work. So the auditor also hesitate to charge more, hesitate to put more time for the work. If you hesitate to put more work, more time, then you are inviting more liability. So you charge more, you do a lot of homework, and then only certify these things. Don't simply, based on the assistant's say verification, don't jump to some conclusion. So this is the, I told you, the number of clauses under which is section, which class. Say you have to put the number correctly without going through these things. It's not that simple. I request you to do that. Then, sir, this branch kitchen PPT, sir. A branch will circulate to all the registered members. Can you? Huh? Then why you take not necessary, sir? No, the same thing is available. The same thing is available. We have given it to a branch. So these are all the things, sir. You please. So that form 10A details to be provided by in this class. So this is the what is there in the form, printed form in the website of the income tax. I have only cut paste for your information's sake. Only where necessity is there, I would try to explain in detail. So the trustees, if they are not individuals, normally trustees will be individuals normally, but the author of the trust can appoint other than individuals also as trustees in case they are there or they're having interest. So like that, the question is there, which in very rare cases it will apply. So you can fill it up. Care is more important. That's how only I drive home the point that much care has to be taken in filling up these things. So down, this is the another heart of these things. The Income Tax Act has not defined religion. The section 11, 12, 13 or section 1023C subclause 5, any religious institution can claim its income exempt provided it is approved on 1023C or registered. So religion is not defined. So several people went to courts whether it is religious activity or not, because some people call it a spiritual activity, not a religious activity, whereas the income tax officer will say no religion. For example, the controversies. Vedas preservation and preaching is my object. I say it is a knowledge. So it's a knowledge preservation propagation is only charitable. Whereas the income tax department will say, no, Vedas are only meant for Hindus. So it is a religion. Anything related to Hindu is a religion. You are not applied under the religion. You applied as a charitable. No, we cannot give you exemption. It is not, the money is not applied for registered objectives. So like that they will say. So they have given the code numbers under section class 11. These code numbers you have to put in the audit report. As I said in class 31, the income applied also, unless this 11 class you fill up, for those objects only the amount should be. The whole exemption of system is other than objects 1 rupee you should not. It will lead to even cancellation. So other than objects, income shall not be applied. A simple example. Every street end you will find elementary school. Up to 21-22 assessment year, only 1 crore gross receipts without any registration was exempt. From 22-23 you have got 5 crores gross. Say for example, a school is a bigger school with 2,000 children. So say it's a grammar school. They may have more than 5 crores. So 5 crores receipts exceed means registration is a must. That school has given some floods. So the school has given 2 lakhs rupees donation to the Chief Minister Relief Fund. Now, that 2 lakhs rupees given to the Chief Minister Relief Fund, is it for its object? Its object is education. Is it for education? No. Then you are not eligible. So other than objects, if you apply any money, though it is to the government only, though it is a real public cause, no, this act says only for your objects you should apply. So one should be very careful about these objects. So these objects, one should be these code numbers, and then as per the object, cash expenditure. Sir. Sir? Can we mention more than 1 code also as applicability? Sir, these forms are applicable those who got registration. They may have only 10 lakhs gross registration. They may have less than 1 crore. They may have more than. If once you take a registration, monetary limit is not there. For automatic limit only 1020 small 3AD, small 3AE, education, medical relief, that 5 crores limit. So if you apply under 1020 4, 5, 6, 6A or under 12AB, you have to file these audit reports. I'm giving the difference.
Relief to the poor as well as medical relief, everything.
You have to, first of all, 3 stages. First of all, at the time of registration, have you mentioned as per your deed this many objects in the time of registration? Number 1. Number 2, while filling up this column 11 also, clause 11 also, yes, those clauses are applicable to me. Give these code numbers. Then when you go to clause 31, as per these clauses, what you have applied, everything should sync. Am I clear, sir? That's how. Then care in choosing the objects. That's what I say. See, for which object you have applied, you have to be very careful. So what is the object? So for example, some people, even for a provident fund trust, they apply 12AB registration. Can we apply? An employee's provident fund of a big limited company, you cannot, because it is not for the public. Public means undefined people. For a provident fund or some other trust, employees benefit trust, they are all gratuity trust, superannuation, they are all for close, identified people. Any trust which is meant for, because Income Tax Act says, Schedule 4, for provident fund gratuity trust, you should apply to the commissioner, you should get these things. So by reading all these things, you will apply the under section 12A. No, it is not a public trust. It's only closed. So that's why choosing the objects and then applying, one should be very careful. What do you want to do? Because we are going to see in the next classes, by modification or adoption of any objects within 30 days during the previous year, unless you apply to the commissioner for fresh registration, you are already having registration in 22-23 financial year. By mistake, as I gave the example, an education institution gave a donation to the chief minister. Within 30 days of you giving the donation, you should have applied for a fresh registration. Regularize this. Otherwise, no. It is a modification. Adoption means by resolution. So we are going to see that. So actually, the 19th October 2022, on 19th October 2022, the Supreme Court has given 2 decisions. The 3-member benches decisions, 2 decisions have come. One is the new noble education from Hyderabad only, it went up to Supreme Court. Now the total country is shaken by this decision. This is under 1020C, they said, ours is solely education trust. They lost their case in Tribunal, High Court, and then went to Supreme Court. Supreme Court also said, yours is not solely, yours is educational trust, not solely education. Solely means scholastic education you have, then only. Normally nowadays, right from LKG to UKG, in addition to the recognized district education officer will give the recognition to the school. University will give you recognition to the degree colleges. Board of Intermediate Education will give the recognition. So they are recognized scholastic education, you will say. But besides this, in the colleges, what they give? Foreign language, please learn, will give a certificate. Learn music in the last hour, music certificate, yoga certificate, so many other courses, or in a degree college, simultaneously pursue for UPPC examination, group 1 examination. So because 2 degrees in 2 courses in 1 period, same period, so many things. Now it says solely for education, you are entitled to income tax. Otherwise, no income tax exemption. In the last class, you see, the then Commissioner of Exemptions, Hyderabad, said, you are not registered under the Charities Act of the state, which is mandatory only in the 4 states where Public Trust Act is there. Bombay Public Trust Act 1950, Maharashtra, Gujarat, where Public Trust Act is there. In Andhra Pradesh, in Telangana, in Tamil Nadu, southern India, in other parts of northern India, no Public Trust Act is there. Only Indian Public Trust Act is there. So Indian Trust Act is there. No Public Trust Act is there. So registration under the Act, now the Supreme Court said, my decision is prospective. Whenever you hereafter come for registration or renewal, first to register under the Charities Act and then only Income Tax Act, registration shall be given. So this decision has come in October 22. So luckily, all those who got registration as education institutions without going to Charities Act, AP Hindu Religious and Endowment Charities Act. Now in 2026, when you go after the 5 years last, necessarily you have to, that is this. So what is education? That is the primary cause. And then this class 12, as I said, adoption or modification. I give one practical example. Even in Hyderabad city, medical colleges are, because All India Institute of Medical, for medical college, there should be a approval from the center. So for engineering college, AICTE, Delhi, like that. Though the state government gives permission, subject to the central government permission only, you can establish a medical college or engineering college, professional college. So now, for establishing a medical college, you need to have a hospital, a 300-bed hospital. If you have only, college will be given, because college and hospital, theory and practical to go together. Just like your 3 years apprenticeship, our 3 years apprenticeship, medical college means hospital should be there. Now they are doing non-profit organization. Now this year, they want to have a special ward for white ration card, poor of the poorest. They want to have a special ward and they want to give free treatment. So they want to, is it necessary for them? Because will it become a relief to poor? Really relief to poor. In your charitable purpose definition, section 215, charitable purpose means education, medical relief, relief to poor, yoga, preservation of environment, preservation of monuments, and advancement of another object of general public utility, GPU, general public. So on the GPU, another Supreme Court decision of the same date, we are going to see another 2 slides. So here, the adoption or modification objects means the moment this trust passes a resolution that hereafterwards in our hospital, there should be a special ward only for white ration card holders where we have to give free treatment. By passing a resolution, will it amount to modification of their objects? My question, please understand, mine is not a monologue. I want it to be a dialogue. You please tell me the answer. Don't be mere spectators. So this medical object institution passes a resolution that hereafterwards in our hospital, 50 beds are allocated only for the poor of the poor. We want to serve the poor. A resolution they have passed. So will it amount to relief to poor besides education or besides medical relief? Thereby they have to go for within 30 days to the commissioners as an auditor when you are certifying by seeing this resolution. What is your opinion? Yes, sir. Not necessary. Why? So if the objects means policy, my policy itself is not for profit motive. Here also further not for profit. Where is the question of again? It is not amendment, because the department may interpret in a different way. We should have that ability to say what is new, what is not new in furtherance of the main objects. Because normally when you draft also, object 1, object 2, object 3, object 4, object 5, object 6 will be any other objects which are incidental and ancillary to the main objects. You should write incidental and ancillary 2 words. You must have, then only the safeguarding, because we don't know, something will be there. For example, 30-40 years back, education means computer science is not one paper. Now in high school level itself, one computer is paper is there. So you cannot envisage future and then say, because computer science is part of necessary education. Doesn't mean it is a technical education. You cannot write. Earlier we used to write education. So we should envisage all these things and then. So that's how modification, adoption. Okay, commencement of activities. What is this? Those who take the provisional registration, if they commence their activities before commencement by registration itself, by starting itself, you can go for a registration. You don't know whether they will give or not. That's why you applied. They gave temporary, both for ATG and this thing also they have given provisional registration. But once you commence the activities within 6 months, you should apply for whether they have commenced. And then details of place where this is what books of accounts. So this books of accounts rule 17AA is a new rule which is a very, very exhaustive. For business, though you are giving form 3CD or 3CA, 3CB, 3CD, for business books of accounts defined in the Income Tax Act section 212A. 213 is the definition of business. So in the Income Tax Act, books of accounts, not exhaustive. Whereas now for this charitable trust or say religious trust, public trust, the books of accounts to be maintained by a rule in August 2022, they have prescribed exhaustive. What are they? Whether all those prescribed are maintained or not, the 8 books of accounts and around 9 documents are prescribed, which they have maintained or not, you have to certify through the audit report. Okay. So these are these things. Books of accounts, 212A is not applicable because the rule 17A, August 2022, when they have prescribed, exhaustively they have prescribed, which you have to say whether they have maintained or not. So if books of accounts are not there in the business, I am asking all of you seriously. A businessman having 500 crores turnover has not maintained proper books of accounts. Whether he is better than the 500 crores, same similar business, same type of business, same type of entity, company, or say some other thing, or a proprietor, partnership proprietor, let us say. Whether books maintained person is in a better position or books not maintained position is a better person. Position. Huh? Books maintained person is a better position. In my view, books who has not maintained is in a much safer position. I dealt such cases more successfully. This is the truth, ground reality. Because if you maintain books of accounts, audit is necessary. If audit is necessary, cash payments, no TDS payments, everything you have to certify. Somehow or other, the net profit is 3%, assessed income will be 20%, 30%. If no books of accounts are there, right from Supreme Court to any tribunal, any number of days, any business you take, I will give a case. Any business you take, I will give a case. What the business High Court, Supreme Court said, when no books of accounts are maintained by a reasonable basis, what the other fellow of the similar business is getting the net profit average, that average rate you apply assess. That's all. Don't do anything. For all the violations you punish. No. Taxable, after all income you have to arrive. That poor fellow could not maintain the books of accounts. Estimate. So, business fellow who violated many things is more safer than who complied all the things. Because you have to produce the books, you have to get audit and then scrutiny, so many things. When estimate, what is it you can do? So, the maintenance of books of accounts is a must. If you don't maintain such books of accounts, the auditor says he maintained 75% correctly, 20%. Even if the 20%, 20% you are not maintained, your income will not be eligible for Section 11 exemption, 10 exemption. It is normal computation, Section 1310. The word specified at 4 places they have used in this 11, 12, 13. So one place is specified situation you will get normal revenue income minus revenue expenditure. In problems, one problem we are going to work out. How to work out also we are going to see. As per the Section 11 exemption, same problem. How we are going to get the answer. If books of accounts are not maintained, how to compute them. We are going to see this. And then, this is what I said. They gave exhaustive list. Normally, it is very difficult to maintain all this, because they are doing charity work as a record work. Record work, they have to maintain this much record work. If they do, they cannot do the charity work. That's the only problem. So this is the exhaustive list they are given, which they are given a code number also. You have to say, as I told you, 8 types of books of accounts they are given, and documents they are given, which you have to mention. So now advancement of this is the whole problem. What is this? Audition. What is the audition? Ahmedabad Urban Development Authorities. General public utility. Because though the definition of charitable purpose is given in the Income Tax Act, the last clause general public utility is a very wide one. Wide one. Using this, even the cricket associations, they say for general public utility, we are doing non-profit organization. The Supreme Court has hit. If it is general public utility, Naresh Galligar, కొంచెం ముందు రండి. మీరుంటేనే ఎక్కువ షైనింగ్ ఇక్కడ. విందలుచుకుంటే ముందు ఉంటే సీరియస్గా ఉంటారు. మీరుంటే మాకు స్పిరిట్ కదా. మీరుంటే మా ముందు స్పిరిట్ ఉన్నట్టు. ప్లీజ్. So, the general public utility means it covers a wide range. As I said, cricket associations also cover this. What are the general things? Any literary promotion, any dance, music, fine arts, or any other social services like that. So anything which is not covered in the education, medical relief, relief to poor, this thing will come in advancement of another object of public utility. So on this, the government promoted Hyderabad Urban Development Authority. If you search in the Income Tax Act, Hyderabad Urban Development Authority, it took more than 14 years for them to fight up to Supreme Court. Thereby, they got some 250 crores refund. Hyderabad Urban Development Authority. In Tirupati, we have fought for 11 years for Tirupati Urban Development Authority. Similarly, several urban authorities got their relief. The department went to Supreme Court. In the case of Ahmedabad Urban Development Authority, the Supreme Court finally said, yes, they are eligible because they are promoted by government. Same activity if it is promoted by other fellow. What these urban development are doing, even now in the past 3 months, you have seen in Hyderabad, so much government land is being auctioned. So the urban development authorities are selling the land as house plots or commercial plots. And so the department says, yours is a business activity, real estate, at par with real estate. Come on, pay the tax. Department is not satisfied. Whereas the court said, what for they do? Profit motive? No. They want to serve the public. This is one type of getting the income and then serving the public only. So it is public activity. Income exam, Supreme Court finally said. So there is a thin margin, not based on the activity, based on the who. This includes ICA. How many of you are aware? This decision includes Institute of Chartered Accountants of India, which got a favorable order from the Delhi High Court. The department went to Supreme Court. So this decision covers the ICA also. So the Delhi High Court said, Institute, why? Institutes audited account. How many of you have seen Institutes audited accounts? Sir, 22 marks here, 1, 2, 3. Because we have so much faith in our institute, it will do properly. So we never look into it. We are paying the members. We are the members. Our membership fees is there. But we don't see the accounts because we have faith. So normally faith is necessary for a human being to have peace. But the blind faith also is not. The department has viewed it. Your accounts consistently surplus money. How do you got the surplus money? By students' fees, tuition fees. Student tuition fees you are collecting, incurring the expenditure, every year you get this surplus. No. You are not for a profit organization. Pay the tax. So the matter went up to Delhi High Court. Delhi High Court finally gave. No. It's a public institution. As part of maintaining the professional education is necessary. As education is necessary, fees is necessary. So then examination is necessary. Surplus, incidental surplus, again they are. So against this department went to Supreme Court. Supreme Court around 100 and odd cases combined one decision. This is one decision. in which the ICA is also got a favorable thing. So that's how, so this is a very important, why we should now look into this. After this decision, the audit reports have come. Keeping that in view, the questions are there in the audit report, which we should 100% understand the decision and then apply. Otherwise, the Supreme Court, as we know, the law of the land, Supreme Court decision is part of statute. Whatever the Supreme Court says in any act, anything, that becomes part of the law. So unless we know the law, how do you apply the law? So we should know these things. So business undertaking. So now these 11, 12, 13 institutions can have 3 types of businesses. 3 types of businesses. A, before 1952 itself, somebody has passed on the business to a trust. This business shall be carried on by trustees and the business income shall be used for public purpose. Olden days, that's one type of 11.4. 11.4a, as we have seen earlier, any business incidental and ancillary to the main objects. Incidental ancillary to the main objects. Normally, for educational institution, for a medical institution, business is a necessity. Why? For example, a hospital is there. A hospital, for example, you are having a NIMS, Panjagutta. Without a pharmacy, can that hospital really serve the patients? No. Then pharmacy means, can they sell less than the cost? They buy the medicines or at par the cost, because some medicines will expire or say get spoiled. So some margin 2%. Once you buy and then add a minimum margin and then sell, it becomes a trade or manufacture and trade. So see, the maintenance of books of accounts separately using the same income for the main objects are the conditions prescribed under section 11.4a to claim the income exemption. So the business undertaking, is there a business undertaking? It is asking. Then the auditor, what he has to see? Activities he should see. Is there a business? I give you a simple example. I am from Tirupati. You know Tirupati, what for it is famous? Laddu. The laddus are manufactured by the TTD. Is it selling less than the cost? They themselves say, trustees said, not we calculating, trustees said, we are recovering our cost. So when you recover your cost and some small margin is there, then what it means? Because you and I need not decide. The Income Tax Act, what it said, business means, business is not exhaustive definition, inclusive definition. Business includes trade, commerce, or manufacturing, or any adventure in any of trade, commerce. That means for a profit motive, consistently if you do, repeatedly if you do, because you would have seen number of Supreme Court decisions, other decisions, shares. A chartered accountant practicing is prohibited to do any business. If you buy the shares, sell the shares online, day to day, then it amounts to, whereas you are permitted to do other than business, that is options, which is not. So by chance, your father has given you 20 types of shares by inheritance you got. These 20 types of shares, if you preserve and sell, capital gains. But in addition to these 20 shares, selling, buying, very often repeated, if you do, then it may amount, because for this number of tests, number of decisions are there, whether he carried on business, because if it is advantageous to you in capital gains, you will go capital gains, 10% pay listed companies. Whereas the officer will say, no, number of volume of transactions, I will shift it to business. So thereby the business income will become 30% taxable. So based on the loss is there, you go for business. Then he will say capital gains. So the business is a number of decisions, controversies. So has been settled what is business, what is not business. Decisions are there. So, but the Income Tax Act definition of business is inclusive definition. So whether the religious institution which is claiming exemption because of registration, its total income, the exemption, if it is carrying on any business, A, it should be incidental to main activity. Because necessary. As I said, the example, hospital, pharmacy, necessity. Otherwise, the patients cannot go and outside buy the medicine. So it is incidental to main activity. Number 2, separate set of books of accounts are maintained. Number 3, the profit is used for main activity. And the number 4, separate audit under business head. You have to conduct any disallowances are there. The disallowances become taxable, though it is total income is exempt. All the 3 conditions actually. But 4th condition, by disallowances, it becomes taxable income. So 100% incidental activity. For example, day before yesterday in Salem, all the schools are covered by the GST. Day before yesterday, I got the same question. Are you as a chartered accountant only from income tax angle you are seeing? From the GST angle, GST people will see. GST people, what they say? If you have charged separately for uniform, books, this bag, that tie, everything, charged separately, it becomes not a composite supply, it becomes a mixed supply. The composite supply defined in CGST section 231 will go off. If it is a mixed supply, pay the GST, though whether you collected or not. So you should have care in this interpretation. Is it a composite supply? Composite supply which is incidental, bundled together where the principal activities. So like that, you should take the care in giving the advice, not from the income tax angle itself, from GST angle. So the incidental activity should be there. Then only your income is exempt if you satisfy all these things. So that's why. So the incidental business. So the clauses after this, I have seen the business undertaking. You have to fill up these columns. Why we say nature of the business, the business code you are having in a Form 3CD also. When you fill up a business code, business code is there. That code is, this is having one more important thing. In class number 19, you are going to see in class number 19, are there any deductions under TDS in favor of the trust under 4 TDS sections only? This and that are linked. What it is, I will show you. So this income from business, the amounts you have to certify. Okay. Why? Because I said the third, first 11.4, second 11.4A incidental. The third is in that advancement of another object utility, there are 2 provisos to section 215 charitable purpose. Which provisos say, in case the advancement of another object utility is having any nature of this business, trade, commerce activity, if such receipts of business, whatever you call as by fees, cess or another name, if they exceed 20% of the total receipts of the institution, it is no longer a charitable purpose. For example, you are having here a Kuchipudi or Kadakali promotion, public trust. That's a charitable organization. It will come in advancement of rights. Now, in one day in a year, you sold the tickets for a big show of that Kuchipudi dance. The tickets sold are more than 20% of your total annual receipts. And the expenditure incurred for that show in Ravindra Bharati is hardly 2%, 3%. So you are having 10%, 15% margin. The officer will say, you carried on advancement of GPU activity, because dance is not education. Now, if the same dance, same music, university affiliated colleges, if they conduct, it will come in education. If not university affiliated private organizations who promote these things carry on, it come in GPU. Now you sold the tickets. So your activity by fees, cess or another name, you collected some money, which resulted into profit. I say it is a business, the assessing officer will say. What will be your answer? Only one day in a year you conducted that. Then will it amount to business? Anybody, sir? For or against? Sir, you have to certify such accounts only. For certification only, today we are having the discussion. If you don't discuss with me now, how do you give the certificate? They have not carried on business, you will give. Then one advice is means, whether carried on business or not. Yes, sir. No business. It is only one time. The object is those funds will be subsidized funds throughout the year to teachers to pay these things. Business means repeated activity. I have not repeated in a year 6 times I have conducted. Then it amount to business. My profit motive only one day, only to promote the main object. So you should argue like that. So different situations. These are all decided cases. For example, in Gujarat, a decided case, landmark case. They are cow preservation they are doing. What do they sell? After the death of the cow, the carcass, the horns, or even when they're surviving surplus milk, they are selling. The officer said, yours is GPU. Out of your gross receipts, sale proceeds are more than 20%. You are carried on a business. The High Court, the matter went to Gujarat High Court. Gujarat High Court said, first of all, their object is preservation of cows. Preservation of cows comes in preservation of environment. All animals, insects must be surviving, then only human beings can survive. If all the insects die, within 6 months or maximum 1 year, human beings will die because they are surviving only, we are also surviving. So the selling of this thing is incidental to make them survive. If I have to feed the grass to the cow, it's milk I have to sell, surplus milk. After the death, why should we waste? So we sell. So the sale proceeds are nothing but incidental. It is not business. Body meant business. For selling sake you bought. For selling sake you incurred the expenditure. For selling sake I have incurred the expenditure. No. So to reduce my expenditure, so that's how you should argue. Decided case. So you should have that what is business, whether they carried on business or not, you should have that. Otherwise, say these activities many number of times will give a lot of difficulty. That's how we should have this. So incidental business I explained. So clause 18, they report the business if it is there. Then the TDS, this section, it is not asking about, there is a section in section 11 subclass says, have you deducted in your expenditure wherever TDS provisions are applicable, have you deducted? That is separate. Here, when you received, it is asking, what are the receipts where you are subjected to TDS? Why should they ask? Because they asked only 4 sections. In TDS nowadays, when I was CA apprentice, hardly 7 TDS sections were there. Now, how many TDS sections are there in the TDS code? Not less than 30. 30 above TDS sections are there. Out of that, this audit report is asking 4 only. Why should they ask 4? Because you received with the TDS means you would have carried on business. So they are asking you whether the trust has carried on business or not. Indirectly, they are asking. Under these sections, have you got any money, any TDS? So what is the nature? The details please give. That's how they're asking. So the business I have said, so the class 20 is more important. What is that class 20? Whether the provisions 1310. I told you, no, income shall be computed 6 types. Out of that, 1 type is a 1310. What is it? If you have not filed the return in time, if you have not maintained the books of accounts first, though maintained the books of accounts, not completed the audit report within the time, 1 month before the due date of filing of the return, you should file that. Though you filed the audit report, you have not filed the return of income, then this section 1310 relevant to section 1023 proviso, second proviso, 22nd proviso is applicable. So how to compute it? Revenue receipts minus revenue expenditure only. No question of out of loans expenditure. No question of capital expenditure. So like that, is peculiar circumstances there, whether it is applicable, that is class 20. So my session actually should have been completed by this time. 36 classes. I have covered 20 classes, but anyhow, in another maximum half an hour, I will complete. But the organizers want a tea break. Slip has already come. So we'll have 10 minutes, 5 minutes, 10 minutes. We will quickly assemble. So in another half an hour, I will complete my 36 classes. The next speaker is going to continue up to lunch. Okay, we'll have break. Audit report.
PPT, sir. System printing కోసం వేరే సిస్టమ్ సృజన వేరే సిస్టమ్
డౌన్లోడ్ అయితే ఏ సిస్టమ్ పెట్టింది సృజన మేడం యూజ్ చేస్తారు అందులో ఉంటుంది అంట
ఉండొచ్చు యూజ్ చేసి సిస్టమ్ ప్రింటర్
ఎట్లా కనిపిస్తుంది
Hello. Hi. Now, yes, friends, we'll resume. The time is very short. So we have covered up to class number 20. As I told you, this class 19 is asking if in your favor TDS is there, 194C. Now in the oh, correct. You are right. Vallu petleda. Slide show from the current. Antena? So in the tea break, 3 questions they have asked me. So though individually they have asked, I will put for the public benefit. The first question, sir, mine is a registered medical relief, medical hospital. Arogyasri people are deducting the TDS. Will it amount to separate set of books of account, separate business activity or professional activity? My answer is no. Because just because the government while making the payment Arogyasri TDS there, your hospital has not carried on any business or professional activity. Hospital is a profession, but not for amount. So no separate set of books of accounts. Number one example. So they would have deducted under 194J or 194C because medical hospital, if at all somebody is paying to hospital, normally insurance companies, they pay to hospital on behalf of the patient who has taken this. They deduct under 194J. Second, some hospital has conducted the medical camps. So in the medical camps, some people donate. Some institutions, when they are donating, normally business institutions, they want to be liberal, donate. But they are afraid that in their business assessment, disallowance will be there. They deduct the TDS to be better answer. So will it amount to? No, because a donation, you should be very careful from the GST angle. The donation, if it is subjected to any condition to be satisfied by the donee is a consideration as defined in the CGST Act Section 231. The composite supply 230 and consideration is in Section 231 definition. Consideration to do or not to do, to abstain from doing something also is a consideration under the GST Act. So if a donor puts some conditions to be performed, where do you have to see? In multi-crore CSR, corporate social responsibility, when the companies pay donation to satisfy the 2% of their profits of last 3 years under Section 135 of the Companies Act, when they give a donation to a public charitable trust for the purpose which is mentioned in Section Schedule 7 of the Companies Act, then only it is CSR Act. So to be on safer side, they put the condition, my money shall be in a separate bank account and the interest thereon also you should accumulate, you should use only for this. Those general conditions are not the conditions. A donation is not subject to TDS sections. But if we expect any performance, a performance certificate periodically to supply, then it becomes a, so once it is covered under TDS sections, in the donee's hands, a public charitable institution, having done the charitable work, the GST people will come. GST will say, you received the money, you passed on some consideration, some satisfaction, then it is a supply. Supply, any money received for supply of goods or services is liable for GST. Even then you can argue that is a medical relief. Medical relief is in the exempt GST exemption list. You can argue, but anywho, you are inviting unnecessary problem. So from that angle also the donations are to be seen. So like that, the third question is, sir, while conducting the medical camps, we receive the fees. Normal. Even a medical camp, a normal eye expert will charge 500 rupees for one sitting. Whereas if you conduct eye camp, you must take 10 rupees or 20 rupees. Then you conduct the eye camp. Will that fees receipt will become a professional receipt, and am I supposed to maintain separate set of books of accounts is question. Not necessary. So it's not that coming. So then commission broker. A charitable institution, can it act for a commission? Can it act for a brokerage? If it acts, then is it within the objects? It may not be. Normally that will not be there. But sometimes, in fact, in the social medias, several false things will go. If you are a charitable institution, I will get you foreign funds 5 crores. What is my commission? It's going on, circulating. They tempt even the charity. Sorry, if your trusts are ready, we are ready to give. Many people would have received such calls. So please be careful. Then this exemption, these things will go. Not that money. So don't resort. So that's a fair sale of goods. So now 194. This is inevitable. Example, one engineering college is there. Some Reddy's engineering college in the outskirts of Hyderabad, running 50 buses. Those 50 buses, they buy only from one petrol bunk, or say one petrol company itself will supply the goods. Then more than 50 lakhs. TDS, TCS, either TDS or TCS circular, this will apply. So automatically section will come. It doesn't mean that he has carried on any business. So that's how the things are there. So one should be very careful. So I covered this class 20. Then I will come to 21, 22, whether the audit has filed for this 21, 22, 23 is nothing but 10BD. What is 10BD? This year, peculiarly, instead of May 31st, they extended the date also up to June 30th. So if at all a charitable institution having 80G, for that 80G donations received, every month you can file form 10BD, or maximum after the end of the financial year, within 2 months. So for the total year, 10BD has to be upload. If you don't upload, penalty is heavy. Penalty is heavy. So that 10BD this year they extended up to June 30th, but 23, but next year onwards they may not. In the act 2 months only. Now in this 10BD, no, sir. I received from Kerala Tissue, a church received a notice in the scrutiny assessment. I have seen your P&L account, income and expenditure account. In your income and expenditure, 75% of the receipts are shop rents received. You are mainly serving the trading community. Whether you carried on trade business or not, you are serving the services, because that second proviso, either it carried on any services rendered in relation to trade or business. You are doing services to trade business people. So yours is not a religious institution or a charitable institution. Why can't I forfeit your exemption? This is the notice given by the assessing officer. Because rents from, we gave the reply. Activity. Income is not activity. Product side. My debit side is nothing but pastor's salary, church maintenance expenses, gospel buying, printing. My religious activity, I got registration as a religious activity. My expenditure is a religious expenditure. I am a religious institution. Why do you look at my income side and say I am a general public utility? Because general public utility, commerce, you have served, rents received. Don't go by that. So this is the answer, sir. Okay, sir. Okay. So then, so this 10BD, they want to dissect your donations. They are doing operation of your donations. How many donations you receive? In cash, in kind. Because 80G, more than 2,000 is not eligible for. So in cash, in kind, how much? See the transaction. Cash donations exceeding 2,000 rupees. You will see 23, 3A. Like that, they dissect your donations. They want you to give total picture of donations. Because 10BD, what 10BD? Those donors who want deduction in their computation of income ATG deduction only, they will use their PAN number or say Aadhaar number, then only you can upload 10BD. So your total donations, how much? That is sum total of donations, 22. So which are the total sum of donations reported in 10BD. See, out of your total donations, you would have reported something lesser than that, not necessarily total. So what is that? And then how much out of that is eligible in cash, in kind? So the donations bifurcation in class 23, you are having 8 subclasses. So these all the out of that anonymous. Why anonymous donations come here? You are going to have in the 31 also the computation of income. Anonymous, again, the anonymous donations, somewhere is 31 plus 34 classes. You are going to see once again what this says. For religious or charitable institutional, donations is the major source of income. Out of these donations, broadly 2 types. Ordinary donations, revenue income. Corpus fund donations or specific donations, capital receipts. For capital receipts, earlier, section 11, subsection 1, class D, any corpus fund donation, specific donation is exempt. No conditions are attached. Now 2 conditions are attached. What are the conditions? Such corpus fund donations, either A, used for the specific purpose for which it is given in the same year, claim exemption, or in the same year, if you are not able to use for the specific purpose for which it is given, you keep them in section 11.5 mode, we will give exemption. Even if you are not able to keep in 11.5 mode, 2 conditions you are not set, neither applied nor deposited, then it will become ordinary income in the year in which you received. In the subsequent maximum 5 years, whenever you replenish, deposit, use, then we'll give exemption in that year. Though income is in 1 year, that condition satisfying is another year. So the corpus fund donations separately needs analysis. Revenue receipts also needs analysis. Corpus fund donations, donor's identity is there, direction is there. Revenue receipts, separate identity, what is this? Anonymous donation. Anonymous means what is it? Where the donor's name and address is not available is known as anonymous. So anonymous donations, for the past 10 years, it is there. The section 115 BBC. What it says, any anonymous donations are taxable at 30%. What is the limit of exemption given there by class is, out of total donations, 5% or 1 lakh, whichever is higher is exempt. So remaining amount only is taxable at 30%. So this is the anonymous. So in this donations analysis,
most of the trust community money collections and they are collecting rents in the name of donations. 10BD for them filing it is very difficult. So what to do?
Your question, first answer is, any religious institution which keeps hundi and collects anonymous donations is not covered by 115 BBC. 115 BBC is not touching the religious institutions. First answer. Second, if it is a charitable institution, which I know only Seva Sangam, Sri Sailam, there are not less than 20-30 Seva Sangams as I know in Sri Sailam. Those people constructed the buildings. If they take the rent from August 2022, any rent is liable for GST. Up to August, or up to not July 16th, 2022, under the GST Act, from 16/7/2022, below 1,000 rupees rents also are covered now. Up to that, 1,000 and above only are covered under the GST. Now any rent is covered. So now all the people are saying, sir, we don't call it rent, we call it donation. That's the question. Now, if it is donation, you will avoid GST, but under the Income Tax Act, all such donations, number 1, 500 rupees, 1,000 rupees, corpus fund to construct the building, can we say? It will not be reasonable. Then if it is revenue receipt, 85% in the same year you have to apply. So, whereas you are using that money really to maintain the buildings. So, though you call it donations, you see to the extent of your expenditure, you call it donations, you are safe. Above that, it is very difficult. This is the answer. Sir, 10 BD for such donations, maybe your difficulty number is more. That's all. That is the difficulty you are saying. Sir, when you are receiving donations, your Sri Salem, that is Seva Samiti, may be having per year 10,000, 20,000 numbers, donations. TTD Anadanam per day 10,000, not per year. They have to file online. What do you say? See, TTD like Anadanam, per day 30, 40,000 people are eating. Do you mean to say everyone who eats simply go? He will something he will donate. Then they have to upload. Once they give, it will be in lakhs. So number is not the criteria. The Income Tax Act says, if you receive, you file. That's all. You have to do it. Donor is not claiming. Donor should not have given his PAN number. Simply name and address. If name and address is there, it is not anonymous. Name and address plus PAN number or Aadhaar is there, you have to upload. The difference, are you able to understand? You have to maintain, in my view, practically to avoid difficulties, charitable activities, receipts, payments, separate account. Religious activities, receipts, payments, separate account. Number one, her question is, in my objects, religious come charitable activities. Now, how difficulties I face? Naturally, religious donations, no anonymous. Charitable donations, anonymous is taxable at 30%. How do you say? Both donations will be there. Then separate set of books of accounts you should maintain. You should satisfy the law. You should satisfy the law. That's how I give the advice. And was fundamental thing, one thing you please try to know. A religious institution, religious money can be used for charitable purpose. A charitable institution, charitable money, though you have religious out, cannot be used for religious. One-way traffic. That is the fundamental difference. Your account should satisfy that. No. See, her question, CSR donations are coming with a specific direction. See, in English, the word corpus means a dead body. You will call it as corpus, which cannot be moved, which cannot be shaken. That is corpus. Now, a CSR company gives to a charitable trust a donation with conditions. So, under the Companies Act, they are bound to spend the money, not to acquire any asset. No benefit should directly or indirectly go to the employees or their customers. There are the conditions under the Companies Act. So, the charitable institution also to accumulate, to acquire assets, they are not giving, to utilize. So, even I go to the extent of clarifying, a CSR activity, public toilets, Swachh Bharat, public toilets is there in that activity. Now, public toilet, is it an expenditure or asset? Public toilet is an asset. But from the donor's point of view, it is an expenditure. So to the CSR funds, with conditions when they come, in your accounts, on the day you receive, it should go to the balance sheet as a liability. In the year, it may be for 1 year, 2 years, it may take to satisfy the conditions. In the year, how much you utilize, that much only should go both to the income side and expenditure side of the income and expenditure. Remaining still should appear as a liability. That's how you should treat it. It will not go to corpus. I think 4 doubts you have asked so far. My question answer session is but 4:30 to 5. Then you please, I will answer. I will certainly answer. I made the first minute itself, I said, all questions please reserve again. In spite of it, I answered. So the 10BD is analysis, which you have to see. And then these are all the questions about the donations only. So I need not satisfy these things. So I will go to the next class. Important. What is this 1310? I told you 6 types of incomes are to be computed. The next speaker is going to cover 3 types of computation. So I have covered first so far the anonymous donations. So I will give you some example for that. So this 1310 is also is covering in this first part. So the 1310 is, I told you already, the first conditions. What is the 1310? If the written accounts are not maintained, no books of accounts, no audit as per that, no return is filed, these things. If these conditions are not satisfied, then though you have registration, section 11 exemption shall not be applied, or 1023 exemption shall not be eligible or not, cannot be given. Then what happens? From your revenue income, revenue expenditure only is allowable. No question of capital expenditure being allowed. Capital receipts also, though you received it as a capital receipts from the loans, for example, a capital receipt, if you are going to apply, that will not be treated as application. Similarly, the violations also will become what is applied even the revenue expenditure unless to satisfy 40 capital A3, cash payments more than 10,000, or 40 small AIA, the TDS provisions. To that extent, 30% of that non-TDS will become taxable income. This is this thing, this is covered here. This is one type of computation. I have covered 115 BBC like this. That is here one small thing, which is while original drafting of 115, they have forgotten, everyone exploited. Then they made subsequent amendment in 115 BBC. What is it? If you have received, say, 5 crores anonymous donations, for example, exempt is equal to 50 lakhs. 50 lakhs exempt means 4.5 crores will become 30% taxable. This 50 lakhs will become normal income on which 15% you can claim or 85% you have to apply. So that is the red line meaning. So out of the 5% of the total donations or 1 lakh, whichever is higher, is exempt from the anonymous donations from taxability. Remaining is taxable. So class 24, 25 aggregate of voluntary donations received. So that's how total donations you have to give. And out of that total donations, how much is foreign country? They want to match. You know, in the past 6-7 years, FCRA Act is so much tightened. Around 2,000 FCRA registrations were cancelled. Even the dreadful thing is, TTD, like biggest public trust, religious trust, levied with the penalty of 10 crores FCRA penalty. They paid 3 crores and still fighting. So FCRA violation is very, very careful. One should be. So they are asking, what are the contributions? And then this is 26, the voluntary contributions, the corpus representing donations received. Okay, so these analysis of donations is being continued. And then the representing donation notified. This in ATG, not only for public charitable institutions, for notified temples, government notified temples, renovation and repair of that notified temple, there is a subclass. Is in your donations, such type of donations are there. What is received, what is eligible for exemption. You please see this 11.1D read with 11.15 already explained you before the tea break. So this is how this analysis it is giving. So now you are having to be applied donations. So out of total donations, receipt side, what is separately to be dealt if you remove, remaining donations will become income to be applied, gross. Your gross income itself, something is eliminated, something is roped in. So this is how it gives a calculations you have to do. And then to be applied donations, that's what I said. Total voluntary donations minus anonymous donations to the extent of that exemption, 5% or 1 lakh, whichever is higher. Then anonymous donations, this ATG, notified temples, that separate you do. And 11.1 you already complied. You received specific direction or corpus donation kept in the bank FDs that you remove. Then the remaining become taxable. The formula what they give in detail I have given here. In the form when you read, they only refer to section, subsection, subsection. Unless you open the book, you cannot. But here I have just explained. So the income to be applied. Now, including this voluntary donation. So total income how to be applied is the first part of the story. Receipt side, so far they have analyzed. Because the auditor is computing the exempt income, taxable income. For that, how to arrive? In the receipts, how much to be separately dealt, how much general pool it is coming is this 28. Now, this income to be applied. So I have given the example, like from your main activity, how much, from incidental activities, how much, from rents from buildings is how much? Or agricultural income. Agricultural income is 10(1) exemption is available, even though you are registered. Still under section 10(1) you can claim exemption for agricultural income. So like that, the investments income, you are having deposits and interest income, and miscellaneous income like sale of scrap or some other thing. Be careful, sale of scrap is liable for GST. Your school auditorium let out to some other school annual day also is liable for GST. It is not part of education which is exempt under GST. GST, be careful. Because nowadays, any income tax case, whether trust or business, from GST angle, from both together, you should give the advice. You cannot independently deal with. So now, income to be applied outside India. So 11(1)(c). Somebody has put the question. I have answered in the first half an hour itself today morning. So this is how this 11(1)(c) is there. 11(1)(c) two types: the government approved and the government not approved. Government not approved is not eligible as application. Government approved only is eligible for application. Now this is the whole story. Your income, as I said, revenue receipts, three types. You have broad classification. In education, you should have 4 institutions: high school, degree college, medical college, engineering college, MCA college. So institution wise, you have to prepare to satisfy those recognizing institutions, universities. One JNTU University, one Osmania University. For institution wise, for some other authority, for Income Tax Act club together. After consolidating the revenue receipts 3 types, capital receipts 3 types. The whole purpose of this exemption is different silos, different baskets, 6 silos for receipts. From those receipts, how you applied 6 expenditure payment silos, unless you maintain, unless you arrive from your trial balance or from your books of accounts, you cannot compute the income. The purpose of this Income Tax Act is from your current year income, how much you have applied. Earlier year's income, though you are eligible for carry forward, those FDs if you encash, capital receipts. Have you applied those FDs for the purpose for which you have accumulated? From your receipts and payment account, evident should be there. Mixing up, doing everything in one bundled way will not give the clarity. So you, unless you have this type of, this is not prescribed in the Income Tax Act. Indirectly, all the provisions meaning is you should not mix up everything. What you call in Telugu or here, kichdi. Everything mix up. Don't do that. You will lose exemption. When he asks for the scrutiny, earmarked funds, earmarked purpose. Specific purpose, specific. So receipts and payment you should match. You take a bank loan. What for you are taking bank loan? Is it for salaries? Is it for buildings? Or is it for some other purpose? So you should source and say application, you should match. That is the intention of the act. That's how it is there. So Schedule 29. So the details of income applied outside India. That's what it is there. So class 30 income required to be applied in India. So that's what I said. You are having income, voluntary contributions for other head income minus the to be removed separately tax. Then it will come to income to be applied in India. So if you come to in India, how from 31? This is the biggest class out of 49 classes. Biggest class is 31. So this class is application of income. So here they gave first 8 classes allowable from your income. Yes, these are the application eligible as application. Then another 13 classes are there. 8 plus 13, 21 subclasses are there in this 31 class. So first 8 classes is equal to be allowable. That means it is eligible as application. Next classes, so disallowable. That is from 9th class onwards to 21 class. 13 classes are disallowed. So what is allowable, what is disallowed, you have to see. So the allowable is for your objects. Actually, for your objects, as I told you, by cash, how much? By electronic mode. Electronic mode as per the rule 6C, I think, is defined different ways. Paytm, this, that, NEFT, RTGS, all these things are included as per the rules. So they want you to bifurcate these things. So this allowable is object wise, gross amount, cash wise, bank wise, one analysis, object wise, another analysis. you have to give. So this, then the disallowed amount is equal to the, what is a 40A3 or 40A not complied, or donation to other institution, corpus fund. For you, it is not allowed. You are given it on the payment side, but no, for you, it is not allowed. Like that, they are given 13 items where it is not to be allowed. There, though it comes in your payment side, decision payment, but in computation, it is not allowable. So this is how they are given it. So beyond the objects you have given, see that 16 applied for any purpose beyond the objects. No, it's not allowable. So like that, they are having that 17, any other disallowance also. So what the act exhausted, still something more. As auditor, do you find that it is not eligible? Please give. That's how they're asking. So the total allowable application comes in. So the 31 18th class, total allowable, how much you are having. So you have to compute this. After that, what they are giving last two. What is 15% of your income? Section 11, subsection 1, small a, any unspent money or unapplied, applied minimum if it is 85%, the remaining 15% or less is automatically exempt. But it doesn't mean from your computation, in your computation, 15% is a standard deduction. No, 15% is not a standard deduction. Up to 15%, if you are not able to apply, then also claim exemption fully, don't worry. But you applied only 72% out of your current year income. Then out of 28, 15 is exempt. So 100 minus 72 is 28. 28 minus 15. The remaining 13 is the bottom taxable. That's how in excess of last line you see, which does not exceed 15% is totally exempt. But 15% exempt, remaining is taxable. That's what this is. Or before that 15%, instead of the same example, 100 minus 72, 28. After 15, you are having 13. The 13, either you file form 9A. 9A is without conditions for specific purpose in 11.5 mode. Conditions are not there if you want to file. But in the next immediate year, you should apply. If you file form 10, to that extent, there should be a bank balance, either ordinary bank balance or FD balance. And to that extent, you pass a resolution for a specific purpose, not object, for a specific purpose. For that purpose, within 5 years, you apply. Then alone, you are satisfying the conditions and exemption without paying the tax. This is how should be. Okay. So 13.1, the previous two slides, what is there in the form as it is cut paste. But now just I am giving you the inside analysis, what it is giving. So object wise, first column, second column, other than the electronic mode, how much? So total how much? This is how you have to satisfy in the form. These are all these subclasses you should satisfy. So another thing, 50 lakhs recently in the past 2-3 years has become a benchmark in the income tax. What for the 50 lakhs? TDS sections, TDS come TCS sections, 194Q. So with the 206C, so TDS is. Here also they say, through you, has anyone got 50 lakhs? Because they thought the charitable institutions also, a medical institution, an education institution want to construct buildings. Who will construct the building? Trust will not. Trustees' relatives will construct the building. So to anybody more than 50 lakhs, single or cumulative, give the details in this year to whom you applied. Your application through somebody whom received more than 50 lakhs, those details. So these are all I elaborated those things only. So for want of time, anyhow, in the afternoon when you are dealing with the problems, we can do it. So now it is 12:30, I will try to close it. So another speaker will have 1 hour of minimum time. So schedule 31.6.7, these allowable things I have repeated. So I have elaborated. Loan or borrowing is also application. So they are eligible. Please claim it. When earlier you have taken the loan, in that year loan is not income. The amount You use it for capital expenditure, let us say revenue expenditure, I said. That revenue expenditure capital is not an application. First year you received the loan. Loan is not income. Loan you used for revenue expenditure capital is not application. Both in that year. In the second year or third year, you repaid the loan. Where from? Not out of new loan. Out of your current year, second year income or third year income, if you repay in that year, from that income, to the extent you repay, you have to claim it as application. You are eligible, provided a schedule is given. Loans and borrowing, LB schedule. That schedule says, this loan, which year you have taken? That register, which purpose you used it? Have you claimed it? The schedules, 29 schedules are there, this form. You satisfy those schedules, come back to claim. That's how one should be very careful. Okay. So then this is a schedule class and 8. That's what I told you, no? LB schedule, the opening balance, loans and repayments. So like that. That's why. So amounts to be disallowed, the TDS nature. So many said, without going deep, sir, 90% I have satisfied through bank with 100% TDS. 10%, they are using standard deduction. No? In that I will claim. Nothing doing. Even if you are satisfied 90%, 10% is violation, 10% pay the tax. Because it is not accumulation. 15% less than 15% accumulate. You are applied without satisfying TDS. It becomes taxable income. You have to pay the tax. That's all. So these are all the things not allowable I have given. So class 3110. So details of amount disallowable. So these are all the things. The application outside India without the permission, is disallowable. So then applied beyond the objects, disallowable. Any other disallowance, total allowable. So I have given all these things explained once again. So I need not. So then 31, this 19th class, deemed application, how much is there? So that is also not allowable, because out of earlier years money income, out of earlier years FD, this year you applied, it's not current year. Don't take it into this account. Be careful. That's what they said. So this is the thing. So this I have explained you are the form 9A, form 10 also. So now the application also, all these things. Sorry, these things are 31, 20 and 21. This is the last class. 32 is nothing but numerical figure. What is 32? 30 minus 31 is equal to 31 is applied. 30 is to be applied in India. Applied in India is 31 is equal to the taxable. Still remaining after 15% also is the taxable income. So this is how this class is there. Babu, okay. So now I guess, because the other speaker is going to cover some of the items, but anyhow, I'm giving you just that in these trusts which are registered, 6 types of income is there. That 6 types of income is equal to, after 85% also, still some surplus is there, as you have seen. 32 class, it is taxable normally at ordinary slab rates. Second, you sold some fixed asset. Section 11, subsection 1, capital A says, if at all you sold any asset, not necessarily fixed investment also. If you sold any asset, that asset A, you acquired in the same previous year another asset, no question of income. Sale of asset is a capital receipt. Again, you acquired another asset, 100% not tax. Or you kept the sale proceeds in a 6 months minimum FD as per the Act. Courts, even less than 6 months also they accepted. But as per the Act and the CBT circular, if you sell any assets, instead of you buying another assets or acquiring any other assets, you kept in minimum 6 months. After 6 months, whatever you do, it's then also not taxable. That's if you don't do, it becomes taxable income. Not only revenue receipts, this also. Then applied money, as I told you, disallowance. That is also normal income, taxable, normal rates, no special rate. Then basic violation 1310. I already told you section 1310. Accounts not maintained, audit not done, return not filed, like that. So then also it is. Then specified rates are there for charitable trust. What are the specified rates? Already I told you, anonymous donations separately taxable. Normal computation is different. First, whenever you start the computation, are there any specified rates? First, those transactions you eliminate from your receipts and payments. Specified rates. Then go to computations. Are there any violations? then only first clause you should come. From bottom, you should come to top. That computation only is the correct computation. First of all, I advise you, go to ITR 7, fill up, don't file, upload. Then come to audit report. Once audit report and ITR 7 both matching, no mismatch, everything, then file the audit report first. And lastly, file the ITR 7. This is how you have to do it. Okay, specified rates, 115 BBC 30%, 115 BBA 5 types of violation, which is second speaker is going to give you. And then specified, this is the last death nail, coffin, nail on the coffin. Specified violation, defined 6 types of violations are specified violation. So specified types of violations, which will result into accredited income, defined in section 115 TD. 115 TD defines accredited income. Accredited income is taxable at the MMR. Now the MMR is 42%. So at MMR it is taxable. So 6 violations, what are they? One such violation is at the time of registration, the application for registration contains some omissions, some false things, or incomplete. That can be a cause in specified violation, whereby your market value of the fair market value of the assets minus third party liabilities is accredited income liable for maximum margin rate. So every year auditor, while doing the audit, at the time of registration, is the application incomplete, false thing, or any mistakes have crept in, wrong information. Every year you have to do it. That is the danger. That much is the complication. So understand? They would have given registration. We have done mistake. By mistake, we gave registration. You have claimed it. And the auditory duties. This is comes on. Okay. So with this, I am coming to last but one slide. So the circular number 6, benevolent circular, as I said, those who have forgotten to renew, those who forgotten to convert their provisional into regular, or their regular application is rejected for some reason, now you file Form 10AB, get it rectified. So they have extended up to 30th September this month end. So you please do it. This is how. Then this Form 10 and 9, a number of phone calls I receive. I request all of you not to call me by phone, please. I receive per day, so I cannot answer all these things and my phone will be missed calls. So this Form 10 and 9A, the Act says within the 2 months prior to the due date of filing of the return, the Income Tax Act says, if you want to accumulate the money, for example, 2023 financial year, 23-24 assessment year, 2 months prior to due date, what is it now, 131, whenever any audit is there, including the trust audit, October 31st. 2 months prior means October, September, August. So August 30th, 31st, number of calls saying, sir, today is the last date. What do you want me to do? Nothing, don't do anything. Please keep quiet. Act says 2 months prior to that Form 10-9A. But the board circular number 6/24/5 says, if you furnish Form 10 and 9A by the due date of furnishing of the income tax return, also no question of violation, no question of disallowance. The board circular is a benevolent circular. All the benevolent circulars are binding on the department because they know the difficulty. Because of the representations, if you read carefully, so many people say, if you know the exact application, exact disallowance, only Form 10 or 9A you can file. If you everything know, 2 months before it shall, why return filing? We will wait. So they know the difficulty. They said, simply do it. So don't worry, if you are not filed, no question of delay condonation. This, that, 1 day before, or don't file same day also. The computer sometimes, they receive by 12 o'clock noon, you filed on 31st October, your Form 10-9. And by evening 6 o'clock, you filed your return. The computer there, all the people jumped, it will take the return first, the forms subsequent. This Act says, on or before filing of the return, this form should be filed. So they should notice us. It happened. So please be careful. So this is someone circular. This is, and the second circular from 1/10/23, these forms interchange is there, 10A, 10B. So Those who do up to September 30th, the old 10A, 10AB will prevail. Now the rules they have amended, which will be effective from next month 1st onwards. So you be careful that these things are them. So with this, I have completed. So I thank you for giving, but after lunch, I am there with you. We both speakers will be there. So we will work out the problems. So how many of you problems circulate chesara? Branch నేను ఆల్రెడీ ఇచ్చాను ప్రాబ్లమ్స్ 4 సార్లు చెప్పా. ప్రాబ్లం రిజిస్ట్రేషన్ చేసిన అందరికి మెయిల్లో పంపించండి, ఇలాంటి క్యూఆర్ కోడ్. ఇప్పుడు ఆ ప్రాబ్లమ్స్ వీళ్ళకి ఇస్తే కదా నేను ఆన్సర్ చెప్పేదానికి. ఇప్పుడు హార్డ్ కాపీ కూడా ఇవ్వాల, సాఫ్ట్ కాపీ హార్డ్ కాపీ ఏదో ఒకటి ప్రాబ్లం ఎట్లా సాల్వ్ చేస్తారండి సార్. సో ది సెకండ్ స్పీకర్ ఇస్ going to come, so I will be there with you. So after lunch we will solve the problems. We are given 5 problems. All these sections are intertwined in those problems. So unless you solve the problem, this theoretical understanding is not a real understanding. Please permit. Sir? Sir, any circular, unless it is withdrawn even for 20 years, 30 years. For example, all of you note down, there is a circular number 320. Circular number 320 dated 11/1/1982. 40 years, 41 years back. Circular number 320 dated 11/1/1982. This circular says these public charitable institutions, if at all they have income, that income shall be as per normal slab rates only, not that 164 pay the special rate. The circular even now is binding. So any circular that means what is binding. For example, in survey, what should be done, what should not be done by the assessing officer is given in 1982, 40 years back. Even the counter survey, circular is binding. Please.
Thank you, Falgun sir. Request members to give a big round of applause once again. Again, no, we need to give evening more and more. Thank you, sir. With your permission, now I will call the second speaker. I request speaker of the second section, CAE Chaitanya, please come on to dais, please. Welcome, sir. Chaitanya. I request K. Srinivas sir to present a book sampling to today's speaker. Thank you, sir. Before handing over to the speaker, it's our privilege to introduce Chaitanya sir will be covering class 33 to class 49. Thank you, Chaitanya sir, for handling our request to address us. Sir is a postgraduate in commerce from Sri Venkateswara University, Tirupati. He qualified chartered accountancy in January 2005. Qualified information system auditor in the course of ICA with third rank. A very great, sir. Completed certification course of ICA in international taxation. Completed bachelor's degree in law in 2020. Presently pursuing master's degree from Nalsara University of Law, Hyderabad. With respect to the professional details, he is in practice since 2005. Has varied experience in statutory audits, internal audits, and tax audits. Clientele include various listed and unlisted companies, banks, insurance companies, trusts, firms, and other entities. He has been representing before various income tax authorities and has also actively involved in the preparation and presentation of appeals before CAT appeals and ITAT Hyderabad. Has written articles on direct taxation for Chartered Accountancy Study Circle, Chennai, and International Fiscal Association, Chennai chapter. He specializes in direct taxes with keen interest in international taxation also. He hails from the family of Chartered Accountants and son of our Falgun Kumar sir. Thank you, sir. We are handing over the session to you. Great.
At the outset, I thank Hyderabad branch of SARC for giving me this opportunity. I know I am standing before you on lunch, so I will try and do the best I can to ensure that you get the subject from class 33 to 49. The total budget of India, income tax collections budget of India is around 18,000 crores, 18 lakh crores. The application claimed by the charitable trust across India is nearly 50% of the budget of the income tax collections in India. That is the extent of activity by charitable trust in India. Till last year, the audit report was only 2 pages. Somebody in the North Block got seriously upset. Added to that, there were number of audits by C&AG who gave pages and pages of points on several aspects of a wrong claim by the assessees, wrong allowance by the officers, wrong additions by the officers. It all led to pages and pages of reports. Some were accepted by the department. Some are till now not accepted by the department. I will tell you a very, very small issue. The C&AG recommended that the ITR form must contain FCRA number of the assessee. If at all he is registered under FCRA, the ITR form must capture. Till now, there is no provision in the ITR. Because queries were on a different note, the taking was on a different note. But somehow somebody in the North Block got seriously upset. What he did, he thought, after all, charitable trusts are governed only by hardly some 10 sections. He lifted every section in the act, put it in the audit report. That's all. He lifted every single section, every subsection, every proviso. He lifted it from the act, put it in the audit report. If you read the audit report 10 times, I am sure you would have read the act to an equivalent number. Every single proviso, every single condition as it is has been lifted and put into the act. To a certain extent, they went overboard also. Why I meant overboard? What is not there in the act also they have put. What is called as a copy paste error is also come into the audit report. Several mistakes they have done in the audit report. Unfortunately, there is no proper representation in this regard. But to that extent, there are innumerable, I can tell you at least 5 errors which have come into this audit report, Form 10B. For those who are issuing Form 10B, I can only pity you, barring that. This Form 10B is exhaustive. If we discuss Form 10B, we need not discuss Form 10BB because it is very, very concise. It is very, very short as far as the reporting under 10B versus 10BB is concerned. Before we go to the clauses that are there, for every clause, to the extent possible, I will try and give you a small background so that we will understand the reason for that clause and what has to be disclosed. If we look at the original introduction of tax audit report, long time back, 1980s, 1970s, at that time, while introducing 44AB, the finance minister said the audit report is to help the assessing officer in computing the correct income. Form 10B audit report does not help the assessing officer. It effectively puts down the computation of the auditor, irrespective of whether it is followed by the assessee or not. What is the right computation according to the auditor will be put down in Form 10B. Basing on that, the whole purpose of distributing the dates across 9A and 10 to be filed 2 months before, audit report 1 month before, ITR on 31st of October, all this splitting is only to allow the department to ensure that the data automatically flows to the ITR. If the data flows automatically to the ITR, while processing the ITR, it will hardly take a couple of minutes of time for them to process. They will know what are all the errors that are happening. For those who use income tax utility, good thing. But for those who use private softwares like Winman or Computax, it is challenging for the simple reason that now in all private softwares, data entered in one point is distributed in multiple points. You enter the computation, it will automatically fill the columns in the audit report. You enter the audit report, it will automatically take the figures to the computation. So where you are using private software utilities, you'll have to be doubly sure in ensuring that you have filled the columns properly. They have given a lot of error checks, but I would personally suggest that after having filled this audit report in 10B, you will have to generate a paper written. You will have to generate a paper written, verify its contents, and then go back to filing the form in the private software. Even audit report, you will have to do the same thing. Last but not the least, preparation of accounts is a Herculean task for charitable trust for the simple reason that you'll have to take their books, prepare the accounts as if you don't know the provisions of the Income Tax Act. All you know is only your accounting standards, applicability, classifying the accounts. Then after having prepared the accounts, you will have to start proceeding on the audit report. The process gets amplified if your assessee is a Section 8 company, because Institute says even for charitable trusts, accounting standards are applicable. There are 4 levels of accounting standards: level 1, level 2, level 3, level 4. You will have to take which level is applicable to you and then decide what are all the standards that are to be presented in the accounts. That means your income and expenditure account, balance sheet, significant accounting policies, notes on accounts. All these together form your financial statements. Related parties for the purpose of accounting standards are different, for the purpose of Income Tax Act are different. So accordingly, you will have to prepare your significant accounting policies and notes on accounts. Most of the audit reports are now being subjected to review by QRB. So you'll have to be doubly sure that financial statements are properly prepared to avoid the consequences of disciplinary proceedings by the QRB board. In order to avoid all this, most of the assessees and the auditors are stating, since majority of the charitable trusts are adopting cash basis of accounting, they are saying that the assessee and the auditor both are stating that the accounting standards are not followed. But this has to be a very clear written statement, both in the notes on accounts and in the qualifications by the auditor. A qualification by the auditor, that too for a charitable trust, will never be taken for a serious issue. It will not become a serious issue. So in all probability, it is always advisable to state that the charitable trust has not followed the applicable accounting standards. Let it be a qualification by the auditor. Let the charitable trust also admit it in its notes on accounts that it is not following the accounting standards. Fortunately, preparation of cash flow, which is so vital for the preparation of computation, is not mandatory for a charitable trust. I don't know whether it is fortunately or unfortunately, but Institute says cash flow preparation in accordance with AS3 is not mandatory. So you can prepare an R&P. It need not be in accordance with the provisions of AS3, but otherwise cash flow is generally not applicable as far as accounting is concerned. But the moment accounting gets over, you will start preparing your audit report, that too in the under the Income Tax Act. All the applicable clauses will have to be verified thoroughly to see where there is a probability of reporting an item which could be missed. Our first point as far as Form 10B is concerned is on clause 33 of Form 10B, which is specifically dealing with a section called as Section 115 BBI. 115 BBI is a section which defines specified income. There are 5 categories of specified incomes. All those 5 categories of incomes will be now be specifically taxed under 115 BBI section at the rate of 30%. The same section is now lifted word by word, line by line, and put into the audit report. So before going to the audit report, we'll spend some time on section 115 BBI, and let us understand what is this section trying to tax. This section, the first point says income accumulated or set apart in excess of 15%, where such accumulation is not allowed under any specific provision of the Income Tax Act. Which is the section which specifically prohibits accumulation? It is section 13 subsection 9. Section 13 subsection 9 states that accumulation under 11.2 will not be allowed unless an accumulation form is filed and the return of income is also filed within the due date specified under section 139 subsection 1. So both are the conditions that are to be mandatorily complied. Section 13 subsection 9 states that the accumulation form under 11.2 and the return of income have to be filed before the due dates. Accumulation form, the due date is 2 months prior to the due date of the filing of the return, and this return of income, the due date specified is 139 subsection 1. If you look at section 12A 1 subsection, section 12A subsection 1 clause BA, if you look at that particular clause, it states Finance Act has amended, Finance Act 2023 has amended that particular subsection, which states that the return of income of a charitable trust can be filed before the due date specified either under 1 or under subsection 4 of 139. So filing of a belated return is also allowed for a charitable trust. But when the charitable trust is filing an accumulation under 11.2, under section 13 subsection 9, the filing of the return of income is required to be done only under section 139.1. Belated filing is not allowed, which would mean that if a charitable trust accumulates its income by filing form 10, it has to mandatorily file its return of income before the due date specified under 139.1 only. It cannot seek extension under 139.4. So by operation of section 13.9, if your accumulation is not permitted, it has to be taxed under section 115 BBI explanation clause A and at the rate of 30%. That is the first part of this section. Second part, you have accumulated, you have successfully accumulated either by filing form 9A or by filing form 10. But due to some reason, you were unable to apply it for the purpose for which you accumulated. Either you have not spent or you have spent it for a purpose different from the purpose for which you have accumulated. In those cases, 115 BBI clause B would be applicable. All that amount would be taxed at the rate of 30% under 115 BBI. Third is a case of 13.1D violation. 13.1D violation refers to putting the funds of the charitable trust in modes other than those prescribed under 11.5. So in all those cases, you will have to verify whether the funds are maintained in the modes prescribed in 11.5 or not. If they are not maintained, such violation would lead to taxation under 115 BBI. Fourth condition is the violation under 13.1C. 13.1C violation refers to benefits passed on to related parties. If there is any benefit that is passed on without consideration, then such benefit would be taxed under 13.1C. Thereby, that amount will also be taxed under 115 BBI at the rate of 30%. And the last is application of income outside India. A small distinction here is there is a difference between application of income outside India and payment of income outside India. The Act only prohibits carrying on activities outside India. But if your activities are within India, you make a payment outside India, it is still allowable as application. So if there is a fee that is being paid on behalf of a student who wants to pursue education in a foreign university, such payment outside India will not be treated as application outside India. For it to be called as application outside India, the activity also should be performed outside India. Only in these circumstances, 115 BBI would get triggered. Now, there is a small problem with the violation under 13(1)(c). As you all know, earlier till assessment year 22-23, 13(1)(c) violation led to cancellation of registration. From this year onwards, the conditions for cancellation of registration are amended. They are called as specified violations. There are around 7 conditions which are called as specified violations. Any one of the conditions you comply, your registration will be treated as cancelled by the officer. It will lead to a violation, it will lead to cancellation of your 12AB registration. Now, among the conditions mentioned for specified violation, 13(1)(c) is not apparent. 13(1)(c) violation is not apparent. They normally list down 7 other different conditions. They have also introduced this provision called section 115 BBI, which taxes 13(1)(c) violation. To that extent, it is fine. They have also introduced a penalty provision called 271 AAE, which says if there is a violation under 13(1)(c), then if it is a first time offense, 100% of the income so applied is treated as penalty. If it is an offense for more than 2 times, the amount of penalty under 271 AAE is 200%. So if it is a 3rd time offense, 4th time offense, 5th time offense, the amount of income so applied would be at the rate of 200%, the penalty will be levied. So if you commit a violation under 13(1)(c), you will be taxed on the amount of violation. 30% tax will be levied. Apart from that, you also have 271 AAE violation. Now, the danger lies in the list of specified violations. Specified violations are the conditions which will lead to cancellation of your registration. Among the list of specified violations, one of the condition is not adhering to the conditions of registration. What is meant by conditions of registration? This is a phrase which is not defined under the Income Tax Act, but you will find this phrase number of times appearing in the provisions for charitable trusts. Conditions of registration will appear in your Form 10AC. The moment you apply for registration, be it provisional registration or final registration, the commissioner will issue the approval in Form 10AC. If you look at Form 10AC, it will say conditions of registration. It will list down a lot of conditions of registration. Among the conditions of registration, one sure shot condition would be that there should be no benefit passed on to your trustees to invite violations of 13(1)(c). There should be, all the funds should be parked in the modes prescribed under 11(5), and you should not commit to any of the violations. So these are all the conditions of registration. Only subject to those conditions your registration is granted. So if you commit a violation, probably first time they will levy penalty and leave you. Second time or third time, they might levy penalty and leave you. Fourth time, definitely it will lead to cancellation of your registration also. So 13(1)(c) violation, please be very, very careful as far as these violations are concerned. Having discussed the background of 115 BBI, if we now go on to see what are all the questions that are put up in the audit report. The first one, they say whether deemed income referred to in 11(1)(b) is present in the current year. If it is present, it has to be taxed at the rate of 30%. You simply have to say yes or no. The moment you say yes, you will have to fill up the amount that is liable for taxation under 11(1)(b). What is 11(1)(b)? You have filed accumulation form called 9A for spending in the subsequent year. In the subsequent year, you either did not spend that amount or you have spent it for a purpose other than your objects. In these two circumstances, accumulation will not be permitted. It will be taxed in the year in which you have either wrongly spent or you have not spent. That amount has to be disclosed under 33 clause A. Clause B talks about income that is chargeable to tax under section 11 subsection 3. Section 11 subsection 2 talks about accumulation for a period not exceeding 5 years. Section 11 subsection 3 states that it gives the list of circumstances in which whatever you have accumulated could be taxed in the subsequent years. All those circumstances have been put as it is from the section. They have been put into this form. These are all the purposes for which it has to be. I mean, if at all you are not spending the accumulated amount or you are spending it for other than the specified activity, then all that will be taxed under clause number 33 of your Form 10B. 13(1)(c) will be taxed under C1, 13(1)(d) will be taxed under C2. D, third point number D talks about where the auditee has income accumulated or set apart in excess of 15%, which is not allowed under any specific provision. Originally, if you look at the explanation in 115 BBI, this is the first point which is there, but now it has come to the fourth point in the audit report. Be that as it may, effectively reporting requires under point number 33, clause D. The last point is where there has been an application of funds outside India. That also has to be reported in point number 33. Point number 34, clause 34 of Form 10B talks about anonymous donations. Anonymous donations have to be whatever is the chargeable amount at the rate of 30%, it has to be reported in 115 BBC under clause 34. The only word of caution as far as anonymous donations is concerned is that charitable trusts have also been notified under the PMLA Act. So any anonymous donations could invite the wrath of PMLA provisions also. So please be very, very careful. If at all you yourself commit to the statement that there are anonymous donations, probably there could be a notice from the PMLA authorities also. So to that extent, ensure that you properly report anonymous donations. Originally, anonymous donations had only meant donations which were not having the name and address of the donor. But after the introduction of Form 10BD, it has got extended. They are now asking the charitable trust to collect any of the 6 specified modes of ID cards. You have PAN, Aadhaar, you have voter ID, election card, you have driving license, passport, or any other mode. Any other mode could represent the ID card of central government employees, state government employees, or any other ID proof. All the 6 modes have to, one of the ID card has to be furnished to the charitable trust. After taking that, the charitable trust has to file Form 10BD. After taking Form 10BD, it will have to issue Form 10BE to the donee. If to the donor. If the donor, this year you all might have already seen by now the ITR form, ITR 1, ITR 2, ITR 3, wherever there is a schedule on ITG, it is asking the assessee to write the ARN number of the Form 10BE also. So furnishing of Form 10BE also has become vital. So now the forms have taken the anonymous donations a little further by saying that the assessee has to take, the charitable trust has to take any of the 6 ID proofs that are prescribed there. The only column in Form 10BD where it says if the donor does not have any of the 6 modes, then there is a separate reportable item. Not collecting is different, but if the person who is giving the donation does not have any of the 6 modes, then there is a separate reportable column in Form 10B. In that column, you will have to fill up the value saying that this particular donor does not have any of the forms. Thereby, I am putting it in this column. It is not treated as an anonymous donation. So except for that leeway, there is no other leeway allowed. You'll have to mandatorily collect all the any of the 6 ID proofs and furnish to the Income Tax Department in Form 10BD. Point number 35, it talks about income chargeable to tax under Section 12(2). Section 12(2) talks about provision of education or medical facilities to trustees of the charitable trust. For example, if there is a charitable trust, the trustee wants his children to be educated in the same school of which he is a trust. In those circumstances, unless the trust collects the fees from the trustee, the expenses incurred on providing the medical service or the education service will be treated as the income of the charitable trust under 12(2). That amount has to be reported in point number 35. Similarly, 35B and C are very, very similar. They are talking about specific religious trust like temples, mosques, gurudwaras, where specific ATG recognition is given to them. Normally, ATG is not allowed to a religious institution. It is allowed only to a charitable trust. But to certain specific notified temples, gurudwaras, mosques, churches, they allow collection, recognition under ATG. In those circumstances, all the corpus donations collected have to be maintained in that mode only, and it has to be specifically applied. In case there is any violation in application of that corpus, it will be taxed under section 11(1) explanation 3A. Those particulars are being captured in point number 35. The last point in form 35 is the income chargeable under 11 subsection 4. 11(4) talks about a business undertaking held as property under the trust. For a business undertaking to be held as property under the trust, it should have been given through the trust deed. So in case where 11(4) is applicable, in those circumstances, for cases where 11(4) is applicable, income will only arise if it is higher than the amount disclosed in the return of income. In the case of a business which is held as a property under the trust, income from such business will not be normally taxed as long as it is properly disclosed. But if the officer finds out that the income from such business activity is higher than the amount disclosed, then by deeming fiction, the amount so higher, the amount which is higher than the amount which is disclosed by the assessee will be taken as applied for non-charitable purpose. Thereby, such higher income so found out by the officer will be taxable under 11(4). That amount, if at all, if there is anything there, that has to be disclosed in point number 35, clause number 35 of form 10B. Point number 36 talks about sale of a capital asset. Normally, any sale of a capital asset, if at all the sale is happening, then section 11(1)(a) states that if it is reinvested in another capital asset, if the total consideration is fully reinvested in another capital asset, then the capital gains is exempt. There is nothing to be done. But if it is only partly reinvested, only proportionate capital gains will be exempted. Balance will be taxable. That reporting has to be done under clause 36 of form 10B. What is it trying to ask? Capital asset being property held under the trust, transferred, and the net consideration for which it is transferred. For example, if a charitable trust has a piece of land, it is selling the piece of the land, then the amount of sale consideration collected has to be invested in another capital asset. And for the purpose of the word capital asset, courts have held that investing in an FD with a period of more than 6 months is also treated as acquisition of another capital asset. Subsequently, later on, various courts have held that the time period of 6 months is arbitrary. Even a lesser time period is also allowed. So any sale of an asset has to be reinvested into another asset. If it is not reinvested, it will be liable for, the capital gains will be liable for taxation. That is the sum and substance. Now, I have the charitable trust has sold a piece of land. Then what is the amount on which it will have to either pay tax, or what is the amount which it will have to spend for the purpose of its own activities? It is always the capital gain. The capital gain is the sale amount minus your normal cost of acquisition or normal cost of improvement. There is no indexation which is permitted. On the capital gain, whatever is received has to be applied for the purpose of charitable activities. If 85% of the gain is applied for charitable activities, then even though if you have not acquired your capital asset, it will be treated as complied for the provisions of the section 11. Your ITR form states a different view. ITR form states that the 15%, which is the permitted accumulation without any conditions, 15% is your normal permitted accumulation. That 15% does not have any conditions associated with it. For the purpose of computing this 15%, ITR form is slightly badly put in place, because this 15% ideally it should be calculated on the capital gain portion only. But unfortunately, I mean, to the benefit of the assessees, the ITR form calculates it on the sale consideration value, which is actually not a correct method of presentation of computation. Ideally, this 15% should be calculated on the capital gain, which is sale consideration minus the cost of acquisition. On that net capital gain alone, 15% should have been calculated. But for the benefit of the assessees, ITR form is calculating it on the entire sale value. 15% is calculated on this sale value. Thereby, your unconditional accumulation at the rate of 15% goes up. So even if you spend a little less, the farm is treated as compliant. You need not go for further accumulations. So to that extent, the ITR issue is there. It might get rectified soon, but as of now, that is the issue there. Point number 37 is very similar to point number 31 in your form 10B. What is clause number 31? Clause number 31 talks about your expenditure portion of your income and expenditure account. It says of the total amount spent, where should you start? For reporting either under point 31 or under point 37, says total expenditure incurred, you bifurcate into what is application for current year, what is not considered as application for the current year. What is considered as application for the current year would go for reporting in point number 31. What is not considered as application for the current year would come for reporting in point number 37. Having come to point number 37, you will have to again break that what is not treated as application. You will have to again break it down into various points. What are the points? If you have spent this money out of an earlier year's accumulation, be it 11-1 accumulation or 11-2 accumulation, that has to be reported separately in point A and point B of this 37, clause 37 of 10B. So whatever is not treated as application, you will have to again further break it down into what is out of earlier years accumulation, what is out of 5 years accumulation, what is the spending out of corpus, what is the spending out of the loan. All that has to be further broken down and reported in point number 37. As far as spending out of corpus and spending out of loan is concerned, there are couple of amendments which will impact not only the current year but also the subsequent years. Amendments are going to take effect from next year onwards. I've just tried to put a slide here. The general rule is that any spending out of a loan or out of a corpus is not considered as application. The general rule is that if you are spending out of a corpus or if you are spending out of a loan, it is not treated as an application. In exceptional circumstances, it will be treated as an application. What are the exceptional circumstances? There must be a replenishment of the corpus in subsequent years, or there must be a repayment of the loan. So when I take a loan and when I spend it on any activity or any capital asset, it is not treated as an application. But when I start repaying this loan, then it will be treated as an application. That is the exception to the main rule. Then that exception is not an unconditional exception. It has got conditions associated with it. What are the conditions associated with it? Till such time, the loan or the corpus has to be parked in the modes prescribed in 11.5. You should, when you are trying to replenish that loan or when you are trying to replenish that corpus, you will have to transfer it to a designated bank account. For example, if you are maintaining corpus also has to be maintained in the modes prescribed in 11.5. Then you will have to transfer it from your general account to the corpus account. You will have to do the replenishment in such a way that you are not violating the provisions of 40 capital A3 cash payments or 40 A TDS payments. For example, if I am repaying a loan, then such repayment of the loan has to be through banking channels. It cannot be a cash repayment of the loan. So all these conditions I should not violate. There should not be any violation under 13(1)(c). There should not be any, the replenishment or the repayment has to be an actual basis. It cannot be a provisional entry. All these are the conditions associated with claiming that corpus as loan as repayment. So when I'm trying to replenish the corpus or when I'm trying to make a repayment of that loan, the conditions to be complied are prescribed under the Act. And from assessment year 24-25 onwards, they said you can replenish your corpus, you can make a repayment of the loan. We have no problem. But from the date of the loan or from the date of spending out of the corpus, you have to replenish within 5 years. If you don't do, even if you replenish in 6th year or 7th year, we will not treat it as an application. So say, for example, an engineering college or a medical college has taken loan from a bank. That loan was utilized for the construction of a building. Now, if they are trying to repay that loan, even though it is from a reputed nationalized bank, you have to repay that loan within 5 years to claim the principal portion as application. If you are making the payment after the 5th year from assessment year 24-25 onwards, that principal portion will not be treated as application of income. It will be treated as a non-application. Thereby, you will have to pay tax if you are spending out of the current year income. Just like clause 32 of 10B, clause 38 of 10B also says, out of the total expenditure incurred, which you are not treating as application, out of the total expenditure incurred, which you are not treating as application, you tell me the list of parties to whom you have made payment exceeding 50 lakhs in one single year, whether you have deducted TDS or not. That also has to be disclosed in point number 38. The whole problem is that in Form 10B, wherever they are talking about expenditure, they want the expenditure to be bifurcated into what is through electronic modes and what is not through electronic modes. What is through electronic modes has been defined in Rule 6 ABBA. It is a very long rule. So Rule 6 ABBA, which has provided 8 modes. To that 8 modes, there are 2 more modes, which is account pay check and account pay draft. 8 modes plus 2 modes. Total 10 modes are electronic modes permitted for the purpose of disclosure under the audit report or for the purpose of making the payment. If any of the 10 modes are utilized, then the payment will fall under the payment relating to electronic mode. If it is not in any of those 10 modes, it will be treated as cash payment. So accordingly, reporting would be required to be done. Any expenditure which is incurred in cash, which is treated as an application, if the application amount is substantially incurred in cash, probably there could arise a possibility that your case could be taken up for scrutiny. So the classification would now take a lot of importance. You'll have to distinguish what is cash expenditure and what is expenditure incurred through electronic modes. Point number 39 talks about application of Section 13, subsection 10. Section 13, subsection 10 arises in 4 circumstances. What are those 4 circumstances? If your case is a case of charitable trust, which is falling within the object of general public utility, then your receipts from business should be 20% of the total, 20% or below of the total receipts. In case your business receipts have crossed the 20%, then by application of the proviso to 2 clause 15, you will lose the exemption for that particular year. If you lose the exemption for that particular year, 1013 would become applicable. 1013 is in fact a beneficial section. How is it beneficial? I'll get back to you a little later. But for application of 1013, there are 4 conditions. First condition is you have to invite the proviso of 215, charitable trust, general public utility, business receipts are 20% or more. Second condition, you have not filed the audit report in time. Third condition, you have not maintained the books of accounts. Fourth condition, you have not filed the return of income. In all these 4 circumstances, even if any one of the condition is triggered, automatically 1310 would become applicable. Before the introduction of 1310, if a charitable trust which is registered under 12A or 12AA, if it lost exemption for that particular year, its income had to be computed in the normal modes, the 5 heads of income. It would fall under the income from other sources. For that, what is the expenditure allowable? You will have to test it under section 57. This was the manner of computation before the introduction of 1310. After the introduction of 1310, even if the charitable trust loses exemption under under section 12AB for that particular year. If it loses exemption under 11 for that particular year, it need not go to heads of income. It will straight away come to 1310. 1310 says of the gross receipts, I will allow only revenue expenditure. I will not allow capital expenditure. If I have exemption under 11, application towards capital expenditure is also treated as application. But if I don't have exemption under 11, from my gross receipts, only revenue expenditure is allowed. That revenue expenditure also should be tested for whether there is any cash payment exceeding 10,000 per day. If there is any cash payment, that will have to be disallowed. If there is any TDS violation, that will have to be disallowed. After disallowing all the expenses, only the net revenue expenditure would become eligible for set off against the income. Earlier, if we had lost the exemption, we had to travel to heads of income. Under the heads of income, we used to fall under income from other sources. If we go under the head income from other sources, under 57, in order to claim an expenditure, that expenditure has to be incurred for the purpose of earning that income. If my receipt side had only donations, then what is the expenditure I incurred to earn that donations? Nothing, zero. Donations are voluntarily. They give without any work from the assessee side. So from that donation, no expenditure was getting allowed. Thereby, entire donation, gross amount of the donation was getting taxed. Because under the business, under the normal heads, income from other sources, there must be a correlation between the expenditure and the income. Now, under 1310, they said your income could be of any nature. It could be from the activities, it could be donations, it could be interest, it could be rent. Your activities should be related to your objects. You should be spending for your objects. Even though there is no correlation between the income and the expenditure, I will permit a set off under 1310 to the extent of the conditions specified therein. So 1310 is in fact a beneficial provision because it allows the charitable trust to get taxed at a much lower amount than what it was in the erstwhile regime. Thereby, if at all 1310 is applicable, disclosure under clause 39 of this form 10B would arise. Whatever I've said till now, all that has been captured in this form line by line. What is the expenditure incurred relating to capital? Disallow. What is the expenditure incurred from loan or borrowing? Disallow. What is the expenditure in the form of cash? Disallow. 40 capital A3, 40A IA, all that they disallow. Only net revenue expenditure will be adjusted against the income, and thereby the net income will be taxed under the applicable provisions. So this is how 1310 and its disclosure would arise. They have now asked us to report on 80G subsection 5. 80G, as I said earlier, is only applicable to charitable trusts. If at all any spending is there towards religious activity, it cannot exceed 5% of the total income. That disclosure is being asked in clause number 40. Clause number 40 says, what is the total spending towards religious activity, religious nature? What is your spending towards activities which are religious in nature? To that amount cannot exceed 5% of the total income. That is what this particular clause is trying to capture in form 10BD. Sorry, form 10B. Form clause 41 asks us to provide the list of specified person. Specified person is effectively none other than your related parties. The definition of related parties for the purpose of section 13(3) are different. It talks about author, it talks about trustees, executive members of the society, relatives of the author, trustee or member, substantial donor. Who is a substantial donor? A person who has given a donation of 50,000, either in lump sum or in aggregate, from the inception of the trust till date is called as a substantial donor. For example, if the trust was formed in 1940, every year he contributed 1,000 rupees. By now, he has exceeded 50,000 rupees. He is called as a substantial donor. The list of all such substantial donors have to be reported in point number 41. Unfortunately, what the Act failed to recognize is that if you are asking information about related parties, you should ask about parties with whom you are transacting during that year. You look at Accounting Standard 18 prepared by our institute. It only talks about disclosures with respect to transacting relating parties. It does not talk about disclosures relating to non-transacting parties. If you have not transacted with a related party, you are not required to disclose the names of those parties. The director of a company, the managing director of a company could have a lot of relatives. The word relative is also defined in the Companies Act. He could have a lot of relatives. The names of all the relatives are not required to be disclosed in the audit report, in the annual report, or in the notes on accounts. Only those parties with whom you have transacted during the year have to be reported. Unfortunately, that distinction has not been brought out in clause 41 of Form 10B. They said you'll have to provide the list of specified persons. So whether the list relating to specified persons, should it be restricted to transaction parties, or should it be given with respect to all the parties, is something which is vague. In my personal view, if you restrict it to transacting parties, that would be more than sufficient disclosure. But the whole problem is, how would the auditor know who are the related parties? Nobody knows. See, they are now asking us to report on related parties. Who are the related parties? Relative of the trustee, relative of the author, relative of all the persons. It is impossible to know all the persons who are relatives to all the trustees or the managing partner. So we'll have to necessarily rely on the management representation letter issued by the trust. Whenever reliance is placed on the management representation letter alone and no further audit provisions or auditing any further step is taken by the auditor, it would require disclosure in the audit report. So to that extent, please be careful. You can import the guidance given in 3CD in relation to specified persons. In fact, 3CD is much beneficial for the simple reason that it only asks us to provide the list of the transactions. This Form 10B has gone a step further. It says, provide the list of the persons, provide the transactions, tell me whether these transactions are there at arm's length or not. Is it reasonable or not? That is being asked, which is actually a combination of Form 3CD plus Form 3CEB. Unfortunately, Form 10B, these are all the list of transactions that can take place with related parties. It is now asking us to say, what is the security given? If you have given a loan, is it with a security or not? Whenever you are giving a loan, it says there should not only be interest component to that loan, there should also be a adequate security. Is that security adequate or not? Is the interest adequate or not? That also has to be reported as far as Form 10B is concerned. So all related parties would require reporting in Form 10B. And if your transacting value is below the arm's length, then you will have to report. But if your transacting value is at arm's length or is higher than the arm's length, then probably you can report the same figure as the transaction value in the last column. Similarly, if you have made payment as salaries to the trustees, trustees' salary is not prohibited. You can still make a payment, but that has to be reasonable. You have to ensure that there is no benefit passed on from the trust to the trustee. So if you think the salary is reasonable, you can report the amount in column number 4 there, and you can also report the same value. But if you think this amount paid is higher, then probably you will have to report the correct amount, what is the reasonable amount in the last column. This is how all the related party transactions are being asked for. Point number 43 talks about specified violation. I told you there are 7 circumstances where specified violation can come. Specified violation, if you say yes, it will lead to cancellation of the charitable trust. So please be very, very careful. Only if at all it is applicable, then you put yes. Otherwise, any remark under this point could lead to cancellation of the registration of a charitable trust. 44 talks about depreciation on the assets which are already claimed as an application. Depreciation is not allowed. If at all you have claimed, then you'll have to report. Otherwise, reporting under 44 is not required. 45 talks about section 11, subsection 7. It says that any other exemption under 10 series other than 1 or 46 would not be allowed. In fact, 46 is also not allowed. So any other exemption under section 1 or 1023C, other than that, if they have claimed any exemption, that will also have to be reported under 45. 46 talks about your 269 SS provisions. Whatever are the format that is there in Form 3CD. As it is lifted and put in Form 10B. 46 talks about 269SS, 47 talks about 269ST, and 48 talks about 269T. 46, 47, 48 talk about 269SS, ST, and T. 49, the last point in Form 10B, it talks about your TDS details, the total expenditure you have incurred, whatever is the TDS amount to which it is liable. Whatever is your normal disclosure in Form 3CD, the same disclosure has to be provided in Form 10B also. For the total expenditure incurred, what is liable to TDS, what is not liable to TDS. To the extent liable to TDS, you will have to disclose in point number 49. Please be careful here, because provisions of TDS which are applicable to a business concern are not normally applicable to a charitable trust. So to that extent, please be careful, make a comparison wherever applicable, wherever your payment is applicable. On that, you will have to necessarily deduct TDS. After deducting TDS, it has to be reported in point number 49. These are all the schedules. Your TDS returns and other details are getting captured here. I hope with this, I've completed all the points relating to Form 10B. Thank you all for a very patient hearing.
Thank you, Chaitanya sir. Now we are breaking for lunch. We will reassemble at 2:30 sharply. Thank you. Post lunch. Yeah. Okay. Okay, okay, sir. Thank you, I will definitely. Yeah, sure.
I'll do it first. Live.
Friends, without a loss of time, let us go to solve the problems. Actually, anything knowing is easy, doing is difficult. Even if you see for 3 months, 4 months, a person cycling, without you start pedaling, it is not easy that to do cycling. So these complications, though in the forenoon we have explained theoretically, how far you have understood, unless you make an attempt, it will not be there. So I am left with two options now. The problems, though we have circulated earlier, we have been telling them that the small branches, when we send the problems, they put in the QR code mode. So while entering, registering itself, the moment you show the QR code, it will get downloaded problems. Then on the laptop, everything working is. But now, don't worry. So now for problem number 1, 5 problems are there. It will take roughly 2 to 2.5 hours to solve all these 5 problems. But anyhow, quickly, if you cooperate, we will try to analyze and make you understand the nuances of these practical problems. An educational institution is having the following receipts and payment account. So as I told you, the cash system from 22-23 assessment year has come into work for application of income, not for arriving the gross income, only for application of income cash system. So the income side, even now, the method of accounting what you follow will become the income, whereas for application only cash system is being allowed. So this year, that education institution is having in lakhs 235 lakhs, and then donations general 10 lakhs, donations in hundi. The education institution at the main entrance gate, they kept one Saraswati, goddess Saraswati statue, and then kept a small hundi. So that whoever is nearer to examination, that fellow will put 10 rupees in the Saraswati hundi. Maybe may goddess make me pass. So now is it the anonymous donations will be there. So it is in hundi 2.5. So bank FD interest 3 lakhs, bus fees collected 5 lakhs. So during the year, they have encashed the old FDs up to 30 lakhs. And then on the payment side, if you come, salaries 132 lakhs, administration expense 32 lakhs, building repairs 9 lakhs. This bank interest gross is taken on the receipt side 10%. So 30,000 is the TDS. So they have constructed new classrooms, maybe for the construction's sake of 104 lakhs, they encashed the old FDs. So closing balance 17 point. Now how to compute the income? So you are all having the scribbling pad at least. So in 5 minutes you can compute. Problem 1 is 5 minutes problem. Problem 4 and 5, 30 minutes problems. So you please start with the small thing. We will go further. Now all of you solve. Very simple. Had you got Excel sheets or say calculator mode, this thing easy, additions, subtractions easy. Please, everyone make the attempt. I want different answers from different people. Yes, sir, all the problems, 12A registration is there. For all the problems, 12A registration is. Though, because as my friend said, less than 5 crores, you would have got a 1020 exemption itself. So instead of that, we are, for the sake of audit reports, we are calculating this problem. So 12A is there. How to? Sir? Not tallying, both sides not tallying. Payment side. 294.5. You take closing balance 18.2. Sorry, closing balance 18.2. Yes. The answers. Problem, the answer. Sir, according to you, what is the normal income? 253. Both are wrong. Anybody else, sir? Correct answer? 255.5. Income. Application? That's also wrong. Then anybody else, sir? Yes, sir? 1.5 is 115 BBC income. Ah.
254 income.
Ah.
253 plus 1 non-plus is allowed.
Sir, all of you attempted, sir. Shall we go to the solution? Anybody else? Last bench? Have you attempted? What is the normal income? Special rate income, they have said. That is 115 BBC, 1.5, they said. Apart from special rate income, what is the normal income? Normal income, the normal gross income, and what is the normal application? And my last question also, please, you have to answer. On the new classrooms constructed, on what value the depreciation is eligible in subsequent years? Yes, sir. That's why you must see both sides. But for the old FDs carried forward, FDs cancelled 30 lakhs. Can you have the new classrooms 104? No. So what is application? Application means from the current year income, not from loans, not from corpus fund donations, not from earlier corpus fund. That 30 lakhs is equal to earlier accumulated corpus fund. That from that, if you construct the classrooms, it is not an application. That's what in the audit report, he has explained that sources other than, for application, sources other than normal income, what you have, the sources you give the audit report, and in the computation also, application from income. Is this 30 lakhs is income, first of all, of the current year? No, then what you apply also is not application. That is the crux of the problem. So first thing, as I told you in the morning, whenever you have a charitable trust computation, what is special rate income? First you calculate and eliminate. What is the special rate income? Ordinary donations 10 plus 2.5 the anonymous donations, 12.5 into 5%, some 62 lakhs or something, or 1 lakh, 62,000 because the amount is in lakhs, or 1 lakh, whichever is higher. So here 1 lakh is higher. So from 2.5 hundi collections, one basic exemption will go. So that one will become normal income. Special rate is 1.5 at the rate of 30%. Now, replacing the 2.5 as 1, what is the normal income? Normal income is equal to 254. That is 235 plus 10 plus 1, 11, plus bank FD interest 3, and bus fees collected 5. All put together, 254 is the normal income. First step. Next, application. When you come to the application, 132, salaries, admin expenses 32, building repairs 9, and the new classrooms constructed out of current year income means you must remove the 30, 74. So all put together, 173 revenue expenditure, because your audit report asks what is the revenue expenditure in application, what is the capital expenditure in application, you must bifurcate. Revenue expenditure is equal to 173, capital expenditure is equal to 104 minus 30, 74. So both put together is equal to 247. To the extent clear, application is 247, gross income is 254, thereby the difference is equal to 7. Now, last part of that class 31, is this 7 below 15%? No question of taxable income. Above 15%, then deduct 15%. Are you clear? So out of 254, 15% comes to roughly 37.6 lakhs. But no need of 37. We are having only 7. So as it is below 15%, it's normal income exempt. Section 11, subsection 1, clause small a. So This is the answer, last part of the answer. In subsequent years, on which value of the new classrooms depreciation is eligible. So now, though you constructed the 104 buildings, in your normal true and fair accounting on 104, every year you have to calculate the depreciation. For charitable trust or religious trust who are having 12-year registration, you must have two bifurcated fixed asset schedule depreciation tables. One is those fixed assets whose cost has already been claimed. For accounting purpose on all the fixed assets, though you charge it to income tax expenditure a normal depreciation, but for computation purpose, eligible depreciation, ineligible depreciation. That's what in the audit report, in the second part you are seeing, what is ineligible depreciation. So that audit report to fill up means this question is going to attempt that though 104 is there, because it is from 74 is from the current year income you have already claimed, first option. On 30 only you can claim depreciation in the subsequent years. So in the two depreciation tables, eligible, ineligible, in the first table, ineligible applied, don't put to 74. In eligible depreciation, second table, you put same building, 30. On the 30 portion depreciation only, you are eligible. Okay, eligible depreciation cost is 30. This is the first question answer. Are you all clear, sir? 2 points of this complicated. Sir? No, no, it is already accumulated. Sir, don't get, please kindly forgive me. If at all you have a corpus fund donation this year, if you are not utilizing it now, you recoup it in the coming 5 years. This problem is not dealing with that. This is not current year capital receipt, which should be recouped in 5 years. This is not the problem. This old capital balance in the shape of FDs, I converted into buildings. This is the problem. Clarified, sir? So problem one we have solved. Very simple problem, 5 minutes problem. Slowly we will increase the complication. We'll go to second problem. So this is the second problem. A hospital by a charitable trust is having the following receipts and payment account. So from this receipts payment, compute the taxable income. So the rupees in lakhs only. If you want, I will put zeros also because sometimes zeros will confuse. Okay. So compute the taxable income. Please all attempt, try to attempt. If you want to see the question, for which amount Form 10 can be filed? This is the question. So for which amount Form 10 means, you must compute the income. If it is more than 15% only, Form 10 has to be filed. So question is, now compute the income. Please attempt. I am leaving the problem on the screen. That's all. Total is not tally. $448. 458. 39. చందు ఫోన్ చేసింది ఈరోజు రిజిస్ట్రేషన్ రిజిస్ట్రేషన్ ఇక్కడ రండి మా సార్
minus 0.3. 440.7 is the tax. Then 6 of 40 is 370. 348.3.
Correct.
And then application is 259. Because 168, 32, 9, 150 minus 100.
I will come.
No. No. Sir, time up. Still anybody wants time? Or shall we go to answer? Okay. Sir. That's right. But what is your gross income and application? You tell me. Hmm. 328 is not 27 is not correct. 228.53. I will tell you the answer. Sir, normally the act gives certain provisions and exemptions. When two options are given, when we are solving these problems, whenever two options are available, we should suggest better option to the SSC. That's how we work out the problem. Now in this problem, a sale of old machine is there 25. Bank loan for the new equipment is there 75. This 75 plus 25, what would he would have done? Purchase the new equipment. Especially, we started the heading saying that this is a hospital. Normally, if you are having hospital clients, you will know that every 5 years, technology in the medical equipment is changing. In my childhood days, I used to see a doctor having X-ray only 2D. 10 years back, I have seen the X-rays of doctors 3D. Normally, majority of doctors, if you go now, X-ray, he will not give a film. He will give a CD, 3D. Now, the present latest technology of X-ray is 4D. So, if you change chest X-ray, if you turn on the computer, what is inside, everything you can see now. Earlier only 2D, now 4D. So, the medical equipment mostly is from Europe. Exchange, any MRI mission, CT scan mission, anything is being exchanged, ultrasound scanning missions. So, this hospital exchange or sold the old mission for 25, availed the bank loan 75, and with that new mission it is. So what I say, sale of equipment, option A, either you buy a new equipment or new asset, or make FD. So in this problem, purposely we made new FD 50 is also there. So now you have got two options. For this 25, either you claim FD exemption or you say you purchase new equipment. So these are the two options. That's why I say normally it happens in every situation, two options. So now we'll start the computation. In the computation, what is a normal income? The fees received from the patients, donations received 40 lakhs, and then the hundi collections. Just in every hospital also, just as I said in the first example, the student will pray before examination. Every patient before going to operation theater also prays. So then Ganesh statue is there. Before that, one hundi will be there. So the hospital also, hospital is a charitable. So they are got in the God's photo 6 lakhs. Sorry, I think it is everything I kept in crores, lakhs. Lakhs only. Okay, lakhs. So now what is first special rate we have to eliminate? What is the special rate? So 115 BBC, 46 into 5% comes to 23, or say 2.3 lakhs. So 46 minus, 6 minus 2.3, 3.7 is the 115 BBC taxable income. Okay. That 2.3 we have to replace in the normal computation. So now 3.7 special rate out of 6. So 2.3 normal.
So now come to the normal computation. Fees 286, donation 40. So this hundi collections 2.3. Put together, how much it will come? 328.3. That's why when somebody said 327, I said 328.3. So this is the normal income on which 15% were eligible. So now come to application. So revenue side, salary is how much? 168. Then administration expenses, 32. Please be reminded, just as a caution, under the CSR expenditure for administration, there is a ceiling. Under the FCRA Act for administration expenses, there is a ceiling. Under the Income Tax Act for administration expenses, there is no ceiling. So don't get carried away by those two. They are different tax, these are different tax. But it asks you, the ITR 7 asks you, what is your administration expenditure? There is no ceiling. So be careful. So now the revenue expenditure 168, 32 plus 9 is equal to 209. So then come to capital expenditure. Now capital expenditure, though you incurred 150, what all you can offset it, bank loan is not to be taken, because out of capital receipt you have quite specifically bank loan for this equipment. As I told you in the schedule to the audit report, LB, you have to, any loan obtained, whether used for which purpose, for this purpose specifically, this loan is for specific purpose. So this loan repayment subsequent years we have to claim. So this loan, you say now, used for equipment. And then the sale of old emission also, because the problem is absent, and also new FD 50, don't worry, when FD available money is there, why should they go for loan? So that means during the year, when they sold the asset and invested the money, it is not there. At the year end, they would have got that money. So the 75 plus 25, both you can claim, or if the 25, if you want to say, I made the FD, only 75 is eligible. So if, first of all, 150 minus 75, you see. So 150 capital asset purchase, and then minus 75 is equal to 75 is the from the income, normal income, 75 if you take. So 209 plus 75, how much it will come to? 284. So 328.3 minus 284, it will come to 44.3. Now, what we eliminated, this sale of old emission and 50 new FD, if you offset, then no question of taxable income. So the normal income is 44.3, 15% of 328.3 comes to, no sir, 328.3 into 15% comes to 49.24. So as 15% is more, 49.24, and the income is only 44.3, it is below 15%, no need to file Form 10. Where is TDS? Pardon, where is that 3? Where is that 3? I have given many question. Sorry. You are right. That problem I have not answered. Administration expenses includes security expenses without TDS of 3. This we have to see. See, if 3 lakhs is the expenditure on which it is not made, while computing the revenue income, that 209 shall get reduced by what is 40A, what section says? 30% only has to be disallowed. 70% shall be allowed. So on this 3 lakhs, 30%, how much it comes to? 90,000. So your revenue expenditure 209 will get reduced by 90,000. So actual revenue expenditure allowable will be, because we are seeing the allowable, disallowable from the audit point of view. So the 208.1 is the revenue expenditure actually. 209 minus 90. 209 minus 90. So it comes to 208.1. So 208.1 plus this is 75, 208.1, 283.1, thereby this comes to taxable income comes to 45.20. 45.20. Still no tax. So shall I repeat the answer for those who want to write down? Please quickly write down. I will repeat the answer. So first we have to compute special rate tax, that is 115 BBC. 115 BBC, anonymous donation 6 lakhs, 5% of gross donations, that is 40 plus 6, 5% is equal to 2.3, 6 minus 2.3 is equal to 3.70, 115 BBC taxable income at the rate of 30%. That you keep separate. So what is the tax means? 30%, 3.70 tax is equal to 1.11, and education is also, so you don't worry that automatically system will get. Now come to normal computation. What is normal computation? First, revenue income. Revenue income is equal to fees 286, donation 40, and the normal donations 40, and the hundi collections 2.3 only. Because out of 6 we have taken special rate 3.7, normal donations 40 plus hundi collection 2.3, 328.3. This is the gross income. Less expenditure. You first total 168, 32 plus 9 comes to 209. Add 40A, IA, TDS, 30% of 3 lakhs, 90,000. So that 90,000 is not allowable, disallowable. Disallowable means 209 minus 90. So 208.1. So the 208.1 is the revenue expenditure. Capital expenditure 150 minus 75, 75. So inner column 150 minus 75, 75. So 208 revenue expenditure, capital expenditure is eligible, capital expenditure 75. So 283.1. If you deduct from 328 outer column 328.3 minus 283.1, you are having surplus income 45.2. So as 15% of 328.3 is equal to 49.24, the surplus income is fully unconditionally exempt. This is the answer. Ask me. You are right. No. See, her question is, when the fixed asset is bought, I claimed it as fully expenditure 4 years back. Now I sold for 25. Is it not ordinary income? That the act is not presuming like that. Don't, whenever you sell a fixed asset, don't again go back in which year, whether you claimed or not. That the act is not saying. Any sale of assets, section 11, subsection 1 capitalizes. Sale of assets means, first of all, it is a receipt. A, if you use the net sale proceeds for acquiring a new asset, no income. If you B, instead of acquiring a new asset, you put it in a bank FD or a bank 11.5 mode for minimum 6 months, then also it is not income. So as new FD is 50 is available, this 25 also, if you assume, so 25 will go off. You need not worry. So that's how we should take it. Okay, sir. So second problem solved. Sir, if you are not having that 25, not against 50, then 25 will go to normal income. 25 will go to normal income. That means instead of 328, it will become 353. So then you will get some surplus. Then form 10 you have to file. Next problem we are having. Same thing, next problem we are having. We are having how to compute form 10. Next problem we are having. We are seeing. So problem 2 is over. Everyone has taken the answer, sir? Then shall we go to problem 3? Now, what all we have not discussed in the forenoon, a new problem I have given. What is that problem? As per the CBTD circular and court decisions, principle of mutuality is a recognized exempted income under the Income Tax Act. The Income Tax Act is having section 10 exemption sections. In no subsection of, we should call it clauses, not even subsection, section 10. So in no section 10 clauses, principle of mutuality is identified. Court said, principle of mutuality will apply to Income Tax Act. What is principle of mutuality? If an association where members only contribute the money for the benefit of members only, then it is not an income under the Income Tax Act. Normal Income Tax Act, any person includes section 231 definition, person includes AOP. But for the, as far as the court decisions are concerned, any association or any group of association members, if they contribute money and they enjoy that money, then it is a principle of mutuality under the Income Tax Act. Now the question comes, such a principle of mutuality applicable associations, if they do the charity work and their object charitable purpose is there, can they have a 12A registration? Number of decisions say such institutions also can have 12A registration. As in the morning she has put, no, religious come charitable is there. Yes, eligible for 12A registration. Similarly, principle of mutuality come public charitable, eligible for such associations, number of associations that I have given the problem like Cloth Merchants Association. A cloth merchants association, normally we think that who are the members? All the retail cloth stores. So these cloth showroom fellows members are there. They contribute yearly membership. This association not only doing this thing. For example, you are having in Nampalli, every year exhibition grounds are there. Every year they conduct the exhibition. It has to be a decided case. Nampalli association is also went up to tribunal. So number of municipal associations went up to tribunals, high courts, number of decisions, decided cases. So this principle of mutuality applicable associations also can have public, for example, RE Owners Association, like that, so many associations. So in this problem, what we are having is, this is a Cloth Merchants Association. So during this year, they are having 12A registration. This year, they are having receipts and payment account. So now you please attempt within few minutes, we will come to the solution. Please attempt the problem. 12A registration. Slightly nearer to answer, but slightly. Ban Narayan garu, please come, Randy. అయ్యా అవి ప్రింట్ తెచ్చి కొద్దిగానే తెచ్చినట్టున్నారు, ఎగ్జాస్ట్ అయిపోయి. బాబు ప్రాబ్లం ఇవ్వాలి సార్కి. ఇదిగోండి సార్, ఇది థర్డ్ ప్రాబ్లం. కొంచెం స్లైట్లీ సేమ్ ఆన్సర్ దే సెడ్, స్లైట్లీ. Sir, everyone attempted? Shall we go for answer? As I told you, mutual benefit associations, income normally is not taxable. I will give 5 examples in day-to-day life. Number 1, apartment residence association. Apartment residence association, as per the RERA Act, the developer shall hand over the common areas to the association. The association can use the common area for their common benefit or even for the benefit of others. There is a car parking area, no inmate is using, they will let out to outsiders. Open rooftop is the common area. To maintain the lift, why should we collect from members? They let out this, or say they allow a cell tower fellow to have a cell tower in the rooftop. That cell tower rent, that fellow will deduct TDS. That cell tower rent is taxable in the hands of the residents association. Members' fees collected, maintenance fees collected, even if it results into surplus, it is not taxable income based on the principle of mutuality. The third party income, what is principle of mutuality? Members only contribute to the money, for the members' benefit is exempt, but others give the money. If the residents association every month collects some surplus money to keep the lift, one day suddenly after 10 years the lift will fail or lift will become unusable, then 30 lakhs, 40 lakhs they have to use for lift. So they keep all these years, 10 years, some surplus money to replace the lift. That money they will keep in the bank FD. Bank FD interest is third party income. The cell tower rent is third party income. Car parking charges collected from others other than members is third party income. Such incomes are taxable. At 30%, they have to file the ITR 5 as an AOP at MMR. Say, if any member is having in that association a taxable income, the association will have a max. So that's all. I give second example, the Cloth Merchant Association. Third example, many companies will have employees cooperative consumer stores. Employees cooperative consumer stores will have. So then who are the members? Employees. What these cooperative stores will do? It will buy the goods from wholesale market, sell at a nominal 1%, 2% margin to members. Who are all the buyers? Members only. Though they have to register under the GST Act and pay the GST on the value addition, but under the Income Tax Act, such consumers cooperative stores are not taxable. Though their income and expenditure audit, even as a chartered accountant audit, when you have to file the return of income, if third party income is there only, you must admit and file. As per the income surplus is not taxable. Third example. The fourth example, Maharashtra, especially Bombay, is famous for housing cooperative societies. If somebody refers to any case laws, number of case laws on that, TDRs taxable or not. Only it started with Maharashtra. So the housing cooperative societies, that's why in the definition of transfer section 247 also, this comes, and in the house property head also, it comes, taxable. So this land will be purchased by the housing cooperative society. Land UCI is right. Land independently will not be transferred to the members. Normally in Andhra Pradesh housing cooperative societies, the housing cooperative should buy minimum 10 acres land and then transfer the land to the land each member. That is the cooperative. There the land will not be transferred. Land will be cooperative society name only for 30 years, 40 years, 50 years in Maharashtra. Only a member is entitled to a right to use particular portion of land, plot number 1, plot number 2, plot number 2. Now 30, 40 years in Bombay, the land rights are 1+2 only. Now 1+6. Then what they will do? The cooperative society will enter into an agreement with the builder, with the consensus, with the agreement, with the consent of all the members, and then they go for building. That's why each member will get one more flat extra. So this is also a cooperative. And lastly comes the fifth example, ATP. In section ATP, you are having subsection 2 and subsection 4, where they say any principle of mutuality based members, labor cooperative societies, their income is totally exempt under ATP. So, Income Tax Act, instead of saying principle of mutuality, members only will contribute and then get the income. ATP also recognized to some extent principle of mutuality. So these are all the principle of mutuality, these things. Now in this present problem, because some introduction is, because it is related with the non-taxable exemption income, I have included this here. So this Cloth Merchants Association membership fees 5 lakhs collected is not taxable income because it is for the member's sake. First eliminate 5 lakhs. Then what is the other income? 27 plus 22nd exhibition stalls. So here also in the morning what we have discussed, the Ahmedabad Urban Development Authority's case, object of general public utility GPU. The GPU, what it said, whenever you deal with the public, collect some money, if the margin is thin, it is not a business. If the margin is huge, it is a business. The Ahmedabad Urban Development Authority, the honorable judges have discussed, giving an example, marriage halls. Several communities will construct the marriage halls, let out to their own community or to anybody else. For example, you are having in Kachiguda, Aryavaisya hostel. In some other place, a D hostel. In Amirpet, you are having a Kamasangam. Kamasangam is a very classical reported decision where the tribunal, Hyderabad tribunal, some 15 years back, denied the 12-year registration exemption. So then subsequently they got. At Kamasangam, what they have done, they constructed the buildings, they collected the donations, they constructed the buildings. The Interior Department refused 12 years. They went up to tribunal. Tribunal asked, what sort of charity? Sir, we are going to do the charity. That's why we let out the building. First, we constructed the, received the donations and constructed the buildings. If you're going to do, then after doing, you please come. Now, no question of exemption. What the donations you collected? Taxable, please pay the tax. So these are all the reported decisions. So now I'm coming to this. Exhibition stall rents 27 we have to see with the expenditure, exhibition expenses 25. So this is not a business done. Exhibition means public only. Stall rents not necessarily from members. Somebody else also has taken stall rents. So this is a GPU. Cloth Merchants Association is a GPU. General public utility is not coming under medical relief, education, this thing, relief to poor. So this 27 minus 25 as the margin is thin, it is not a business income because in the principles we have discussed in the morning. So 27 plus 22, sorry, 27 plus, now shop rents. The whole this 11, 12, 13, what is gross income, what is net income? In the case of a property, because on the gross 15% is allowed. But in the case of a property, for example, the whole controversy because of a Karnataka High Court decision for the educational institutions, is the 15% on the gross fees of the students or on the net income of the education institution? One decision has come on the net income, then ultimately it was a tribunal, no, that's wrong. So they have, by a special bench decision, they have overruled it. So this exhibition 27 minus 25 is 2 is equal to very, very thin margin. So it's not business income, normal income. So we include 27, 24 minus 2 to add that specific income, specific expenditure from property. If you incur, it can be deducted. Remaining only is the gross. There is one decision, a clarification. That's why I say shop, this Cloth Merchants Association has purchased the land long back, constructed the shops long back, and let out the members for cloth shops. You will find such things in not in Hyderabad, I think, in Chirala, in Bapatla, Tenali, Vijayawada. Vijayawada, there is a near bus stand only. Vijayawada, very big complex, Vastralata complex. So only cloth shops. Association has bought the land. Association has let out the shops. That's the example I had. So 24, you got the shop rents. The municipal tax paid naturally for it. So what is net income only you have to take as part of your gross income for these buildings. So 24 minus 2, it comes to 22. So we are calculating the normal income. 27 plus 24 minus 2, 22, 27, add 22, and the bank FD interest 4.4. Put together, 53.4 is the normal income on which you are eligible for 15%. 53.4. Now come to revenue expenditure. Inner column. Exhibition stalls expenditure 25. Then building repairs 3, normal income, normal expenditure. And they have conducted free health camp because in their objects there may be relief to poor. There may be relief to poor. See, relief to poor is a very big word when compared with education, medical relief. You please see, relief to poor means the poor people's health expenses by a medical camp if reimbursed. It is relief to poor only, not medical relief. Your medical relief is a different thing. Similarly, if you give for poor students as educational fees reimbursement, your fees reimbursement is not education objective. Your object is to relief to poor. So this objects class selection, number of controversies, please be. So the revenue expenditure 25 plus 3 plus 3, 31. 53.4 outer column minus 31 outer column, you will get 22.40. Till this extent, everyone is clear? Come. Sir, this salary, what for? To maintain the association. When you claimed 5 lakhs membership fees as exempt, non-taxable, salary 2 lakhs also, normally for maintenance of association, not for public charitable activity, objects say. We cannot say. Debatable. We cannot say because you are having membership fees 5 lakhs. What for you collected membership fees 5 lakhs? To maintain the office, give circulars or say some service to the members. So 2 lakhs you cannot claim. Controversy, don't claim. So this 2 lakhs we are not claiming. So the remaining 25 plus 3 plus 3 comes to 31. So outer column 53.4 minus 31 is equal to 22.40. Now out of 22.40, what is 15%? Sir, 22.40, 15% of 53.40. 53.40 into 15%, 8.01, no? So you deduct from 22.40, 8.01. All of you are follow, sir? Able to follow? Anybody? Okay, we'll go. So 22.40 minus 15% of 53.40 is equal to 8.01. So the balance is equal to 14.39. So the 14.39, what you have to do? File form 10. What is the procedure for filing form 10? A, there should be a resolution for a specific purpose. This is a classmates association. What specific purpose they should say? Either for charitable purpose. Sir, we want to buy some equipment, medical equipment or some other thing. Specific purpose you should say for charitable purpose. So for charitable purpose, you should accumulate purpose, not the object. Number 2, to the extent money shall be in 11.5. In the closing balance, how much you are having? Closing cash balance, how much you are having? So they assume that this 30.96 is in the SB account, savings bank account. So if it is in savings bank also is 11.5 mode, but you should not touch it from 31st March 2023 to the extent of 14.39 while you are filing form 10, immediately convert into maximum instead of 14.39, 15 lakhs round amount. You say 15 lakhs in Andhra Bank. Sorry, now Union Bank. So you must mention this in the ITR 7. If at all you are filing form 10, in which bank you kept this money, you have to mention in the ITR 7. So that care if you take only, pass a resolution only, in the audit report also specifically mentioned, then only you are entitled to exemption. So be careful, file form 10 for 14.39. Even for a higher amount, if you pass the resolution, nothing. Lower amount, you should not pass. So round amount, you can pass 15 lakhs and then say it includes this, then claim the exemption. Naturally, 99% charitable insurance, after the audit only, you will know 10 what is form 10 eligible amount. But from 31st March onwards, you should not have touched it. You should not have touched the minimum level that you should not touch. That's why whenever you are ending the surplus in the March month itself, be careful. Either before March 31st or after March 31st, before the audit report is signed, yes, this money is kept separately. That income, we are not touching separately. When you are, I'm giving you this, sir, kindly, if you permit me, whenever you have got more than 15%, the surplus is there, the Income Tax Act has given two options. What are the two options? Either 9A or Form 10. What is 9A? 9A, whenever surplus is there, A, due to accrued income which is not received, we are not able to apply. Possibility A. B, for any other reason. For any other reason includes last week only I received donations. How can I spend the money for objects? So that can also be income. So you say any other reason I received it, because no accrued here, rescission payment, everything is received. Form 9A if you file, when you should be confident of filing Form 9A, in the next immediate following year you should apply. But in the case of educational institution, bound to be expenditure. But in the case of class association, how can you file 9? So that's why I'm giving the difference. Why Form 10? Because all the consequences we are trying to learn by practical examples, where to apply, where not to apply. That you should be careful. Okay, sir? That's why I told you the morning, see, up to 139.1, you are having October 31st, the board circular is there. So as per the board circular, you can file Form 9A or 10. No problem. This year. No.
Form 9A is not workable. That you will receive the interest only at the end of the so there's no point in committing by way of filing a Form 9A.
That's it is up to you, because SAR's given example is I have put the FDs for 5 years. My FDs will mature in the 5th year. If at all I file now, because accrued interest on these FDs I have taken in this current year, which will mature in the 5th year, taking 9A may be risk, SAR says. Yes, sir? So that's one version. What she says. Every year, first year you file 9A, second year you file 9A, 5th year in the year in which you get the surplus, all these 4 years you should apply in 1 year. It is a very risky thing, SAR says, maybe situations. So practically I gave. So third problem over, sir. First one by one. That salaries too, I have taken it a membership fees. Association running expenditure. Association income is exempt, not taxable, not exempt, not taxable. In the GST language, we have to speak. Then you want membership fees 5 lakhs also to be taxable? Principle of mutuality, you don't want option? Then if you want to take salaries 2 lakhs, then 5 lakhs also you take. Then better 5 lakhs you claim and 2 lakhs don't claim. That is the better option. That's how we should go. Next question, sir. Yes. Yes. No. Sir, basic exemption, whenever you want to pay income tax, normal rates, then the question of basic. You want to accumulate means basic exemption remove and then form file 10, it is not there. For the surplus, you have to. Sir, 15% already given. Why you want again 2.5 lakhs? Already 15% is given basic. This is special code, sir. The computation under 11, 12, 13 special code. So we cannot take double benefits. Okay, sir? Okay, for problem 3 is over, sir. Now shall we go to problem 4? Sir, this is a old age home. Sir, kindly go through the problem, try to attempt the solution. Sir, Form 10 can be filed for a maximum of 5 years. Last year amendment, if you notice, earlier it was 6th year you can apply also was there. That is amended and removed in the Income Tax Act, last year Finance Act. Maximum 5 years only, no 6th year. But no problem. It was filed 5 years. Now within that 5 years only, it's the problem has come. Now this current year is within the 5 years of that earlier filed Form 10, within the 5 years only. Actually, this problem at the bottom, what I have not shown you, the answer normal 12A computation if the return is filed in time. B, though it got its accounts audited in time, if it has not filed its return of income in time, what is the taxable income? That is 1310, which we have discussed in the morning in both sessions. We have to work out as a second answer. First A answer you please work out. Then we'll answer B answer also we will work out. Then we'll have after 10 minutes a tea break. And fifth problem, higher level complication rather than this, something more. That after tea break we'll have. And then for 45 minutes we'll have question answers. Now, answer A. If everyone has completed, we'll go for answer. At 1 minute, I will come. Yes, sir. Attempted? Everyone attempted? Answers. Everyone attempted means what is your gross income? You attempted? Madam, you attempted? What is your gross income? Not 90, correct. Then next, madam? Not correct. Next? This 71 is correct. How it is? You please see. See, here, old FD is cancelled during Form 10. That is a related 20, including Form 10 related. That is it current year income? No. So it is a special rate income. So if you violate Form 10 conditions, under which section it is taxable? ఏమండి మార్నింగ్ నుంచి రామాయణం వినేసి లాస్ట్ లో రాముడికి సీత ఏమంటే ఎట్లండి రామాయణం విన్న తర్వాత రాముడికి సీత ఏం కావాలంతా విన్నా హరికథ అంతా విన్న తర్వాత లాస్ట్ లో రాముడికి సీత ఏం కావాలంటే ఎట్లండి వస్తాం 5 minutes లో వస్తాం 5 minutes టీ బ్రేక్ రెడీ వస్తున్నాం సో 115 BBI what is that 115 BBI violation of Form 10 is comes in 115 BBI special rate tax. So what I said, whenever you get a problem, if violation is there, first to compute the special rate income, and then only you come to this thing. So you have violated, then 115 BBI special rate. What is the special rate? FD is cancelled is 20. Originally you filed Form 10 for how much? In the, That's what I'm coming, sir. So Form 9A opening 9A balance carry forward balance is 19.5. Form 10 is for 24 because these old days home they want to buy kitchen equipment. Earlier donations they kept in FD and then Form 10 they have 24. But now out of 24 lakhs FDs, what they have cancelled? 20. So first what you should do, special rate you have to calculate. Since morning I have been telling, whenever a problem comes, first special rates you eliminate, then come to normal computation. Special rates how much? 20 you cancel. What is the new equipment you bought this year? 14. So 20 minus 14, what is the remaining is? 6 lakhs. 6 lakhs is 115 BBI, special rate taxable income. So first you eliminate, then come to normal computation. So then what is normal computation? Normal computation is equal to 5 plus 50 plus corpus fund donations. Now for corpus fund donations, one of the conditions, what is it? New FDs. So if you assume that corpus fund donations, what you got, new FDs 20. Normally, whenever a foreign funds comes, practically, don't worry about the act. Practically, you should advise the clients. Normal donations, separate series of receipts, normal receipt books, one you keep separate. Second, whenever a corpus fund donation comes, separate receipt books, separate bank account. Why? The act words, if you see, the specific donations shall be maintained separately. Maintained separately in red letters, you try to underline. And in the section when it said maintained separately, just like 11.4, if a business activity is there, books shall be maintained separately. So what is maintained separately is a very highly debatable thing. In the same computer package, if you give a separate code, company, 1, 2, 3 companies and then merge. So you give a separate code for business activity, maintain separate, or another computer system, another maintain. So similarly for this corpus fund donations, normally separate bank account use. Why? That corpus fund donations are eligible for exemption under 11(1)(d). A, if you use for a specific purpose for which the donations are received. B, for example, in colleges, I get practical case like that. Guntur Medical College, NRI doctors, they want to give around 12 crores. What do they want? You keep one name NRI alumni block. You buy, you construct the building and buy. In Andhra Pradesh, unfortunately, there is one corporation known as Medical Infrastructure, AP State Medical Infrastructure Development Corporation. So any hospital building shall be constructed only through that corporation. So a legal problem, a question and an expert opinion, this, that. So the corpus fund donations, NRI donations study, NRIs normally will give a corpus fund only. They don't want to use for salaries because their name should be there. So that's why. So this corpus fund donations, what you got 30, assuming that new FD is made 20, then 10 only will become normal income. So 5 plus 50 plus 6 plus 10 is equal to 71 is the normal income. Out of 71, what is the expenditure? So come to poor feeding expenditure 90. Now, first thing in the first line of the problem, what you are saying, last year I filed Form 9A for 19.50 means first revenue expenditure you should eliminate because in the immediate following year, opening year, so 90 minus 19.5, 70.50 is the current year income applied. 90 minus 19.50, 70.50, then administration expenses 2, and then the, yes sir, that's all. So you are having another problem. What is this? Out of the current year expenditure, the old FD is cancelled, 10 is also there, 20 plus 10. Sir, the Form 10 filed 20, but FDs, old FDs, how much you have cancelled? 30. That means the 10 also used for revenue, that is not eligible, not from current year. So the 10 also you should deduct. So the 72.5 minus 10, what is the actual expenditure, revenue expenditure you incurred from the current year is 62.50 only. Are you all able to get the figure, sir? So 71 minus 62.50, what is balance? 8.50.
So can I say that this 19.5 can also include interest?
You can also say that, but you can say that also, that, but the problem is not clear. Problem should say whether it is a 10 is corpus fund. Actually, no. You are right. Your opening balance 2 only means you have not, you say you use it for some other loan repayment or some other purpose. That year income you use it for early year's loan repayment. You are not having opening. FDs only means okay. Possibility is there. Always 2 possibilities. So now this you're right. It can also be correct. What is best advantage only we should suggest. If 2 options are there, the court said, sir, not I myself. Number of court decisions in the Income Tax Act, any provision, if it is two meanings are possible, assessee beneficial meaning only shall be applied. Number of sections said, number of courts said. So 71 minus 62.5 is equal to 8.50. This 8.50 is less than 15% of 71. 15% of 71 is equal to how much it will come to? 10.10 and odd. So gross income 71, 15% of 10 is equal to 10 lakhs and odd, whereas your income now it's only 8.5. That's why no necessity of filing form 10. So this is this thing computation. Now the second computation and the other problem, now it's already 4. So we'll take up this fourth, the same problem. What the question is? Part B question. All this is only if you file. Now all this computation, if you file the audit reports in time, if you file the return in time. Now the question says, it will file the audit report in time, but it has not filed the return of income. Many number of times for some reason or the other, they miss the filing of the return. Finish. So if you are not filing the return of income, this method of computation is not applicable. Revenue income minus, what is it? After tea break, we'll see. And another fifth problem, big problem is there. That also we have to solve. Hello? 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 Problem. See, good one. Friends, we will reassemble. Nana కింద ఎవరైనా ఉంటే రమ్మను, కింద ఒకసారి కేకి స్టార్ట్ అయిందని చెప్పు. One minute, I'm coming. Friends, though we solved problem 4 part A, one item we have missed, that is the sale of old vessels, 5 lakhs. Sale of old vessels, 5 lakhs. In 71, inmates fees 5, donations 50. That's what I say. That has to be added. So that 5 is different, this 5 is different. 76 it will become sale of old vessels, 5 lakhs. We have not addressed the problem. So sale of old vessels also, because the new vessels purchased 14 lakhs out of FD cancelled. So this 5 is extra. So it will become normal income. Sale of old vessels, 5. Then it will become 76. 76 minus 62.4, 13.5. So the fourth problem, what we gave the answer, we are modifying. Try to correct it. 76, it will become normal income. Where we left 5 lakhs, we have omitted. Only one person pointed out. All others kept quiet. Though we omitted. Sir. So out of 76, what is 15%? 76 into 0.15. 11.4. So what you got surplus is 13.5. Sorry, sir. Sir, 76 minus 62.5. Oh, we want to say 10 is 0.5, but let's not. It is one advantage, but unless the problem is crystal clear, we cannot. So if you see 76 minus 62.5, what is the surplus? Whereas on 76, 15% is equal to. So 13.5 minus 11.4. So 2.10 you have to file. That sir, gross income 76, applied 62.5, surplus is equal to 13.5. Is the surplus more than 15% or less than 15%? It is more than 15%. So deduct 15%, and for the remaining, either you file Form 9A or you file, because you are having closing balance is equal to 1.40. So whereas you are having a surplus is more than 15% is equal to 2.10. Why? Again, after same what the problem third I answered, again you are asking for don't worry about the basic exemption. Basic exemption is not there in the 11, 12, 13 sections. Where is that 11, 12, 13? After claiming 15% also, I will give you basic exemption. Is there anywhere else section? No. So you claimed 15%. That itself is 11.1. Again, why you want to come below to? You file either Form 10 or Form 9A. This is the part A. You are right. If at all you are filing the income, that old circular will come to your help, not directly. CPC will go by the act only, not by the circulars. So after once they raise the demand, put under 154, income is all right, but rate is not a straightforward rate, slab rate. You file that circular. That is the answer. Yes. So now shall we go to form this question number, same problem, part B. What the part B says? If you have not filed the return of income, how to compute? Now you have not filed the return of income. My first question is whether the special rate will apply or not. Special rate income will definitely be there. If you have not filed the return of income while charging the taxable income, it will first special rate, it will charge special rate. So special rate already, what we have done? 20 minus 14, 115 BBA 6 special rate will charge, number one. Number two, for the remaining items when you calculate, normal income, revenue income. What is income? Earlier we calculated 76. Not only 76, the FD is cancelled, a condition violated, no? Sorry, this 20 minus 14 we have taken. So that will not come. So 50, sorry, corpus fund donations will not be given. Corpus fund donation also is normal income. It is income. So corpus fund donations 11(1)D will not be there. It is normal income. So now come to the normal income computation. Normal fees 5. General donations 50. NRI corpus fund donations 30. Bank FD interest 6. Sale of old vessels 5. Totally how much? 96 will come. Normal income. This is revenue income. Normal income. Then comes revenue expenditure. So in that revenue expenditure, just like the previous solution, 90 plus 2, 92 minus 19.5, 72.5, and the section 1310 calculation, what it says, section 1310, anything out of capital receipts, if we incur expenditure also, only from current year income, if we incur the expenditure, we will allow. So this old FDs to the extent of 10 is corpus, earlier corpus. So that is not allowable. So your revenue expenditure, net revenue expenditure, this year income revenue expenditure is equal to 90 plus 2, 92 minus Form 9A 19.50, 72.50 minus this 10, old FD is cancelled. So what is revenue expenditure? Net allowable revenue expenditure 62.50. Are you able to get, sir? No. Old expenditure wise, old first A alternative and B alternative, one is same. You're right. 96 minus 62.5. How much you will get? No question of 15% allowance. 15% giving where it is there in section 11. Once you are not filed the return of income, no 11 exemptions. It is no section 11 exemptions. So 33.50 is the taxable income. So if you file the return of income in time, by filing Form 10, you will get escape. Whereas if you are not filing the return of income, though you maintain the books of account, though you file the audit report, on 33.50 lakhs normal rate of tax, you have to pay the tax. This is the no marginal rate, MMR, ordinary rate only. In the morning, we have shown you 3 ordinary rates, 3 special rates. This comes 1310 comes in ordinary rate. Okay. So this 33.50 answer, all of you got B part. Anybody? Then shall we go to problem number 5? Because question answers is the real. Sir, any special rate will apply as this. because it is not current year income. It's a violation of earlier year's FD. It is not current year. Special rate is for early year violation. It is special rate will apply and normal computation also. Now we'll go to last problem. Quickly, please. This after this, we will have 45 minutes, 35 to 40 minutes for question answer. Please. A medical college cum hospital running trust is having the following. Whose receipts and payment account is as follows. Sir? Make paper like this is the fifth problem, sir. Print lo 2 times ochinda. Their mistake, not my mistake. Answers are beneficial. Questions lo whichever is beneficial. So this is the question. This is the question. See, whichever is beneficial ante on the trust, I will tell a simple thing. First, leave the problem. In a village, there was an old man who is taking care of 2 minor children because he lost his son at a middle age. The old man is taking care of the 2 children. Some good property is there. So the old man is very much worried. After me, suddenly I die. How to manage these properties by these grandchildren who are all less than 5 years, 6 years. So the old man called one gentleman in the village. You please take care of these children with this property. When both of them become majors, and both of them get married, then you hand over out of this total property, whatever the property you like, you hand over to these 2 grandchildren. So the old man, after that, few years he died. This gentleman managed these properties. As you all know nowadays, in any village, a property 20 years back, what it was, now because of roads, because of Palamuru Dam or say some Kaleshwaram Dam, values will go abnormal. So this fellow in the 15-20 years has become greedy and he developed some properties. Whichever is valuable, he thought, because the old man said, the property you like, you give to him, give to the grandchildren. So when they got married, and as per the wordings of the grandfather, we got married, we have grown, please hand over the properties, what my grandfather had. It is true, he left the choice to me. So I am handing over you some not so valuable properties. The remaining thing I am keeping. So these 2 people got astonished. My grandfather believed this fellow as a gentleman. He is now not behaving like a gentleman. Then what to do? Then Mr. Bhanu Narayan is their distant relative. So they invited Bhanu Narayan. What, uncle, you see, this fellow has done like this. What you will do if you are? Because Bhanu is dealing with the trust, most of the trusts. So he applied his trust knowledge. Old man trusted this fellow. Trust law, is it that bad? So what to do? Then he asked the boys, what exactly your grandfather? Grandfather said, while handing over the property to this fellow, you take care of these children, take care of the property, and when they become major and get married, you hand over the property you like. Oh, that is the answer. Called that fellow, called all the village people. So all the village people, I want to give a judgment, villagers, whether I am right or wrong. So Mr. Bhan Narayan said, children, what is your complaint? Sir, he is not handing over. He is taking that property. Then what is your defense? The gentleman said, sir, the old man said, you take the property you like. You give the property you like. You give the children the property you like. Repeat, you give the property you like. You like in quotations. What you have done? I kept something what I like. What you like, you should not. What you like, you should give. So what you like, you should do. That is the trust. Not what you like, you take. So this is the trust. So how the interpretation of words, if you put in quotations, its meaning will be different. If you don't put in quotations, meaning will be different. So that's why two alternatives are available. This is how two alternatives will be there. Now, coming to this fifth problem, this is a medical college come hospital. As I told you in the morning, to get a medical college recognition, there should be a hospital. So now, students fees 50, medical shop sales 18, hospital fees 42, canteen building rent 12, and this bank FD interest 50, new bank term loan 2. Why they have taken new bank term loan? Because the application side is new equipment for, as we have seen in the second problem, the term loan is there, new equipment is there. So on the application side, we are having the building term loan interest 2.23, staff salary is 38, medical shop expenses, because medical shop sales are there 18, medical shop purchases should be there 16.2. That means they kept 10% profit roughly. So hospital expenses out of 42 lakhs receipt, crores, we said this problem, all the 4 problems in lakhs. Now we are saying medical college and these things, it cannot be in lakhs, crores. So we are dealing with crores. So the hospital expenses 39 crores, administration expenses 12 lakhs, bank building loan repaid, that is a bank loan of early arrears, it was there in the opening balance sheet, which is repaid is 10 crores. So TDS on this bank FD interest, so somehow or other, some TDS is there, 0.062. So on 50 lakhs, maybe some other percentage, don't worry about the TDS percent. New equipment 4 and closing balance 3.458. Now, the question, what it is, bottom you go. Out of salaries, for rupees 2 crores, TDS is not made in the current year. So for salaries, 2 crores is not made. Similarly, for early year also, it has not deducted TDS on 1.50 crores, but in this current year, they have collected. See, salary fully you paid last year. Only when it comes to auditor, they found out, you are not satisfied the TDS conditions. So in the month of September, what you would have done, because 43B is not applicable, in the month of September, before filing the return, from those employees to whom you paid 100% salary, you recovered the TDS amount and in their name only paid the TDS. Now, because 43B is not applicable, what is applicable to trust? For applicable to trust is, once TDS is not done, 30% you disallow. Once you rectify the TDS mistake, why should you rectify? Because TDS is also a separate code under the Income Tax Act. TDS ITO, whether you are a charitable trust, whether a businessman, he is not worried. Whether you are an individual also, property purchase without TDS. TDS section you are not complying, he will issue a notice, recover it with interest, and if possible, launch a prosecution. For normal business people, prosecutions are not launched. In the past 3-4 years, for TDS defects, number of prosecutions are launched by the. So they complied the TDS. So in this receipts and payment account, recovery from the employees and paying the TDS will not appear. Only in the notes on accounts it will come. So once in the notes on account it comes, what is disallowed earlier year is allowable because of mutatis. So though revenue expenditure is not there, earlier revenue expenditure disallowed. Now what is allowable is allowable. Law, I am explaining. Once in tea break, somebody asked me, sir, in 1 year I got surplus. Is it mandate that out of the surplus, more than 15%, I should file only Form 10 or only 9A? No, my answer is, some part of the surplus income you will file Form 9A, some part of the income you can file Form 10. Both are possible in the same year. It's not that any one you should choose. Both options also, that is the law. So now, so that 1.50 is recovered. Now comes outstanding salaries, 2.50 crores as on 1/4/22 were paid in this year. See, last year in the problem, what is given is only this is in payment account. The payment includes salaries payable earlier also is paid. What is payable in your accounts if you had claimed last year? Because income we are assuming on accrual based income is there and problem is there. And though we in the present given data is in payment account, your computation is on accrual basis. That's what we are saying. So, but allowable on cash basis. So outstanding salary is 2.50 crores as on 1/4/22 were paid in this year. That means what were the salaries last year would have been disallowed. On payment basis, they are allowable. Similarly, 3 crore salaries are outstanding as on 31/3. In the receipts and payment account, what is not appearing on accrual basis, if you go, this year also some salaries 3 crores is there. Information is given. So then, besides R&P reflected figures, on bank FDs, interest accrued rupees 50 lakhs with TDS is also there, which is taken into accounts in your income and expenditure balance sheet. What the problem given is receipts and payment. Your income and expenditure balance sheet also, it is there. That's what they have said. And another line also is there. What is the other line? Assume medical shop is also having opening stock 2 crores and closing stock 2 crores. 2.5. So the hospital expenses rupees 45 lakhs relate to trustees' relatives. In the hospital expenditure, the hospital has incurred some expenditure to the 13-2 problem we are solving, which includes 45 lakhs expenditure. From those people, rupees 30 lakhs only is recovered because they are trustees' relatives. Normally, hospital give discounts. To auditors also, they will give discounts. So to the relatives also, they are given the discount. So now they recovered less. For a normal patient, they would have charged for the same treatment 55 lakhs. A chargeable 55 lakhs, actual expenditure 45 lakhs, recovered is 30 lakhs. So this 13.2, we are compute its tax liability. So this is the problem. Okay. So shall we go to attempt quickly? So will you attempt or say you want me to attempt quickly? Time short. So I will try to explain, try to note down the answer so that we can go to question answers quickly. First thing, whenever you see a problem, if special rate is there, first you should go to special rate. In this problem, what is the special rate? 115 BBA section. Any benefit to related parties, first compute separately. So what is the benefit? The benefit passed on is 55 lakhs. The amount recovered is 30 lakhs. So remaining 25 lakhs is taxable at the rate of 30%. As the co-speaker has said, what is the penalty for this 25 lakhs? 100%. 25 lakhs is the penalty. In addition to tax on 25 lakhs, this year itself, penalty 25 lakhs also. Income, not the tax. On 25 lakhs, trust has to pay the tax, pay the penalty of 25 lakhs on the income, not on the tax. So this is how this peculiarity of this problem. Now go to normal computation. So write down, sir. So quickly we will finish. Hospital fees 42. College students fees 50. Medical shop sales 18. Canteen rent 12 lakhs. These are crores. 0.12 you should put lakhs. And bank FD interest 50. Also accrued bank FD another 50. Notes given. Not only in the receipts and payment account, which has not come in the notes on account. What is there? Another 50 lakhs is there as accrued bank interest. This is received bank interest 50, accrued bank interest 50 also. No, 111.12. I will repeat. 42 plus 50 plus 18, 0.12, 0.50, 0.50. Put together, 111.12 is the gross income. Yes, sir. Now go to revenue expenditure. Pardon? 111.12. So receivable payment 110.62 plus accrued 0.50 is equal to 111.12. Yes, sir. Now go to expenditure. So hospital expenditure 39 plus college expenditure 38. Medical shop expenses 16.2. Well, at the bottom, after totaling all the receipts in payment account, add less we will do. That how to do add less, I will tell. So 16.2, term loan interest 2.23, administration expenses 0.12, 95.55 will come. Yes, sir. $95.55. Okay. Now 40 AIA. Last year what was disallowed is allowable. Last year what was disallowed? 2 crores, no? The answer at the bottom, if you see problem, out of salaries, rupees 2 crores TDS is not made in the current year. Current year to be disallowed is equal to 30% of 2 crores. So that 1 minute, let us wait. So out of 2.6 you can come or 2, and last year 1.5 is now allowable. So 2 minus 1.5 is disallowable 30%. So 2 crores minus 1.5 crores on 0.5 crores 30% is to be disallowed. So on 0.5 30% comes to 0.15. So 95.55 minus disallowable 40 AIA 0.15. So how much allowable? In the audit report words only, disallowable, allowable, all these words we have to use. 94.4. 95.4. So if this 95.4 you have to deduct from the gross income. How much is the gross income? One capital expenditure is there. So 111. 1 minute. Now, last year, 22-23, on cash basis, you have converted your accounts and allowable means you would have claimed what is closing stock? Purchases unsold is closing stock. Last year, what you would have done? Your purchase is something. Out of that, unsold is closing stock. Always closing stock is nothing but. So last year, you would have claimed on cash basis total purchase, no? Then that opening stock is not taxable. Similarly, this year also, opening stock, closing stock will not make any difference in the cash application, cash system. That point I want to drive home. That's why, though information is given to confuse you, we must get the clarity on cash system. You claim the total purchases on cash system. So then this year also total cash system. No question of opening stock, closing stock.
Cash system of accounting
in the business head. Now we are in the trust case. You last year, you simply imagine, last year you would have claimed total purchases or net purchase, less minus closing stock, less purchase you would have claimed. On decision payment base, you would have claimed total, it is but natural. Actual cash outflow. I put another example. You entered into a building construction contract. Yours is a medical college. You want to have one more floor. For the contractor, you paid mobilization advance. Is it application or not? Advance, though it comes in balance sheet, though it has not converted into expenditure of capital, advance is also application. That's how you should go it. Sir, payments, all payments are, though you follow the accrual system, your application shall be on cash basis mandatorily from last year onwards, no option. So, are you all able to follow, sir? So, this you are now revenue expenditure, revenue income is equal to 111.12. Revenue income. Reduction correct, no, sir? Revenue expenditure is equal to 95.40. So, now what is capital expenditure we are seeing? What is the capital equipment newly bought? 4 crores. What? Oh, term loan, or not out of income, out of term loan. So term loan is not a income. So 4 minus 2 is equal to 2 crores plus old bank loan availed for building repaid during the year is 10 crores. Naturally, this 10 crores is from current year income, no? There is no. So this 10 crores also is a capital payment allowable. Come to 2 plus 10, what is capital expenditure allowable? 12. So 111.12 minus 95.40 inner column plus 12 crores inner column, totally 107.40 is the outer column. So 111.12 minus 107.40, net surplus is equal to 4.72. 4 or 5, sir? 97. So 97, yes. 3.72. You are right. What is the question, man? Tell me. Outstanding salaries in the rescission payment out, are they included? No. We have gone the salaries by payment method or outstanding. We have gone by rescission payment. Outstanding salaries also in this computation has no meaning. If you had claimed the income tax salaries, then disallowance. Whereas we have gone by payment of salaries, the outstanding salaries, though information is there, it has no impact in the computation. Are you able to follow? Pardon, sir? In the rescission payment account, outstanding salaries is included. How can rescission payment is actual payment? We cannot assume. Yes, sir. Okay. All of you are able to follow? Okay. Already 50 lakhs iskunanga. Huh? Sir, if at all your surplus is more than 15% 9A for accrued, otherwise accrued also already spent. Where is the necessity of 9A? So the surplus, net surplus, all of you have got 111.12 minus 107.4, 3.72. This 3.72, 15% of 111.12 is equal to 15% of 111.12 is equal to 16.8 or 9 it will come. Whereas 3.72 is much less. So it is as below, no question of taxable income, no question of surplus, no question of above 15%. Thereby, no need of filing any Form 10 or 9A, no need of paying any tax, except that special rate tax. Yes. Sir, with these problems we have solved. On the special rate you have to pay. But in the ordinary computation, where is the question of paying the tax? It is below 15%, means section 11(1)A, general exemption. Sir, tell me, sir. Sir, for a medical college, medical shop is incidental business. Any incidental business, profit margin is minimum, maximum, all these things, don't worry. Profit margin minimum maximum, is it a business or not? Only for GPU. This outdatation for GPU. For medical college, no question. This is the answer. Sir, with these 5 problems we have answered. So now we will go to the last session. Now, no, question answer, sir. Oh, limited thanks, not full thanks. Natural, sir. Any loan repayment is provided that repayment is not out of a fresh loan. If the repayment is from income only, it is eligible. If the repayment is out of another loan, no, it will not be allowed. That's sir. Okay, sir. So question answers, the last part of the. Sir, sale of assets, gross receipts is income per se. Your intention to buy another equipment or another fixed asset, keep for minimum 6 months in FD, wait for 6 months. After 6 months, whatever way you do it, nothing is taxable income. You please see, understand, sir. The lacuna in the Income Tax Act, try to explore. Section 11(1)(a) says, sale of assets. Same medical college, hospital. Sir wants to sell the hospital, land and building. So land and building, 20 crores you sold. Let the trustees be patient enough. 20 crores in one financial year, let them sell. Gross receipt. 20 crores you put in bank FD for 6 months. My better understanding. What do you mean by month? September 8th you sold. 6 months you keep. Month is not defined in the Income Tax Act. Number of decisions under the Income Tax Act. Month means month as defined in the General Clause Act. So general month means a part of a month is also a month. So even in September, 20 days only, 10 days only. That is also 1 month. Keep for minimum 6 months. Exempt. Once exempt, after that FDs, whatever you like, you do FDs. Keep for revenue expenditure. Not necessarily, don't buy any new equipment, don't buy any new asset. All these conditions only for claiming exemption. Or FD. You keep for FD. And then, this is my answer. Sir, question answers please quickly. One by one. You should come first. Since morning you are sitting only at the last bench. Come first and then ask the questions. I am an old man, not able to listen. Come here. Normally in the sports, 10 to 15 years, 15 years, 20 years, or say old age people, 60 to 65, 65 to 70, like that. So an announcement has come. Those who are 16 years, for them now the game. So my friend also joined, said, I have completed 16 years, no? So interpretation of a statute, those who have commenced during the previous year is the interpretation. An audit report are the activities commenced. If commenced on what date, what activities? The whole confusion is, what is meant by activity commencement? A fresh society, sir. Last year you have taken 21-22 financial year. As she said, you have taken a provisional registration. 21-22, you applied, you have taken a provisional registration. At the time, what you have said, while applying itself, it asks you, when you are registered, have you commenced? No, you are not commenced. So we'll give you a provisional, don't worry. But What the section says, if you have commenced the activities after the provision is valid for 3 years, within this 3 years period, whenever you commence an activity, within 6 months, you apply for regular registration. Within 6 months, there is a condition. Now, what is meant by commencement, according to you? According to you, what is meant by commencement of activities? Backing creditor, no debitor. You deposited the money, you received some money from the promoters, 7 members, 7 capital donation they gave, you deposited the bank. It is not, it's a debit, not a credit. It is not an activity. You are right. So the objects related expenditure is in a common sense. For the objects, I spend the money, then my activity started. Normally we say. But the act and interpretation is not like that. Your common understanding is not that. The moment the members contributed, that itself is an activity. So it's not that only when you do charity for a charitable object to even start first charity within 6 months apply. Don't be under the impression. So the moment financial activity started, it's activity. Within 6 months, you should apply. Her basic question is, I applied for a registration. They gave provisional registration. For this clause in the audit report, activities are commenced or not, what shall I answer? That question not applicable to you. Because 3 years back, 2 years back, you have been filing ITR 5. Then where is the question of this year return? Already proved by filing the ITR, already activities in the earlier itself have commenced. This clause is not applicable. This clause is applicable not all for provisional. Those who freshly start the Trust Act or Societies Act or a limited company, for them only, not for your case. Okay.
6 months existing ones is
not applicable, not at all. For existing people, earlier you had and now renewally filed. No, 5 years they would have given. In fact, the mistake of CPC in 2021 and early 22 is, for many people in that form 10AC, in that column, period eligible 5 years, but they say provisional. Whenever they give 5 years, it is regular only, no question of provisional. Whenever they give 3 years only, it is provisional. Go by the years, not by the provisional regular name. That is the answer. Any other question? Pardon? First of all, what are your objects? What are your objects? Education. So, for buying the land, what are your sources? So, in a particular previous year, out of the school fees, which is having educational objective, maybe to construct a school, they bought the land. Is it application? Capital expenditure is application. Land is an application, 100%, no doubt about it. But my minute precaution is, before buying the land, pass a resolution. This year income, we are accumulating, saving, but instead of paying the income tax, as it allows to apply the money for objects, to start a school in the future years, our own building. Now, present building is insufficient. We are going to buy the land for with an intention to construct the school, a resolution. Normally, majority schools for real estate buy the land, for your information. But don't you contradict it by a resolution, and in the 4th year, 5th year, sell 50% land, saying that now we want to construct the building, no money is there. So selling 50% land is other 50% land, we want to buy this school. Write a resolution. So within the 4 corners, take precaution. That is my answer. Next question. Financial year 22-23, not from 23-24. That's all. The 10B or 10BB difference only from 22-23 financial year. Assessment year 23-24, it is applicable. Any other question? Is that to answer the Refer to the Gangabai Charities Supreme Court decision in the net you file. Supreme Court decision in Gangabai Charities. Form 10, writing general objects, nothing doing. You should be specific. If you simply write, see the for registration sake itself, they said Gangabai Charities. Purposes specified. Object is different. Purpose is different. Object is broader. Purpose is narrower. For example, medical relief. Sir, for medical relief, this money 2 crores is accumulated. No. For buying MRI equipment, for buying to start a blood bank, purpose you should write, not the object's repetition. Number of decisions. In the resolution, that resolution should contain this purpose, not the object's repetition. Next. 1 minute first, sir. That's what I said. The depreciation part. Section 11, subsection 6 talks about depreciation. This amendment is in 2015 or 16? 16. 15, eh? 2015, I remember. This 11.6 is introduced in 2015. At that time, what they said, till that time, court traditions, this side, that side, both sides have come. So they amended the act. What they said? Those assets cost, which was claimed in any earlier year as application, to that extent, the depreciation is not allowable. This is the amendment by introducing section 11, subsection 6 in 2015. Now, sir, question, out of corpus fund, I have some assets. Can I claim depreciation or not? In 2016-17 itself, you should have bifurcated your fixed asset schedule into 2. What is eligible, what not. Sir, on this also number of case laws. Check. All right, 1 minute, wait, sir. Section 32 talks about depreciation in the Income Tax Act. What is Section 32? Section 32 refers to 43.1 cost of acquisition. So 32 refers to the definition of cost of acquisition in 43.1. So what it say, on the cost of acquisition, depreciation is eligible as per the schedule given in the depreciation schedule. Now, court said 11, 12, 13, nothing they said till 2050. Court said application includes depreciation. Then what type of depreciation? Court said commercial depreciation, not the business head depreciation. Court said that normally Income Tax Act depreciation is an incentive, not really the commercial. That's why Companies Act depreciation is different from Income Tax Act depreciation. So for the trust case, as per the court traditions, depreciation means a commercial, real live example. A building is there. Building life 80 years. After 80 years, what will be the scrap value? Maybe 5%. So 95% value divided by 80 years is the straight line depreciation. Same thing by a formula, if you apply, you will get the WDV depreciation. So the courts allowed for trust, religious, charitable, depreciation on a commercial basis. So in SAR question, in the same year, out of corpus fund, out of specific donations I acquired asset, am I eligible for depreciation? Is it a question, sir? Sir.
Asset is not treated as obligation.
Yes, that's what I say. You have been given a choice, either in the year of incurring the capital expenditure, either you treat the capital expenditure as application from the current year income, first choice. I don't want. I will pay the tax or I will accumulate or some other thing. But I don't want to claim the capital expenditure as application. Am I eligible for depreciation? Is the question, sir? Yes. You are eligible for the same year also. Commercial rate, maybe 6 months they said. 6 months depreciation claim. You are allowable.
Does it not direct tax? The tenant is not to allow the application itself. Asset value as application cannot be allowed. So the depreciation also is a part of the asset value only. How can we allow that the depreciation and not allow the capital expenditure.
The act is not saying not allow. The act has given the choice to you. You are saying, I don't claim this depreciation. You are.
No, we are talking about the amendments made in 22 and 23 also.
Huh.
Saying that same year, if you apply the corpus fund for acquisition of any asset or the cost value will not be treated as application.
No. Source is important.
The source only.
Your corpus fund is not income because with the corpus fund you claimed the asset, so that asset is eligible for depreciation. No problem, because you are not claimed it as a say from the current year income. Sir, you please, sir. Our fundamental question is double deduction. This is the question courts have answered. Is the depreciation a double deduction? This question has come before the several courts.
I'm not referring to double deduction at all.
Ah.
The act is amended to the extent saying that if you buy any asset out of corpus fund created in the same year, that application will not be allowed as expenditure.
You are right. From normal income.
When I claim depreciation on the asset value which I bought the same year of creating the software, am I entitled to claim the depreciation as a part of the capital asset?
You are right. You are entitled to.
No. What he is saying is now somebody has donated some amount to purchase the asset. I purchase the asset. Then whether that whatever corpus is there, that is used for the purpose of purchasing the asset.
Correct.
Then can I claim depreciation on that?
Yes.
So it goes against the analogy. It goes against the current
From, sir, no, the fundamental principle try to understand. No, let me complete. From 1/4/21, the ITR 7, when you filed last year 22, what is the corpus fund? How with which assets it is represented? It is asking. Why should they ask? Their intention is these trusts also to survive a long period. Corpus fund should be there intact. Corpus fund should be there intact in assets means those assets which are depreciable, when they diminished, their value is reduced over a period, somehow or other, unless you replenish the capital, how can you replenish from the income unless you charge depreciation and keep the depreciation fund? You cannot replenish the capital assets. That is the principle. That's why they are allowing. The whole purpose of trusts also eligible for depreciation is out of corpus fund you are having the assets, but assets corpus fund will be the same. Every revenue expenditure 100% revenue income revenue. Then when the assets depreciate, when the assets are about to disappear, how to replenish the corpus fund? Through depreciation, create some depreciation fund investments, then replenish the asset. This is the intention of the act. Court said, not I myself said. Court said that. That's how the depreciation.
Like the amendment made in 2022, how is it going to be amended?
Sir, Parliament said.
We did not go back to the old years where this is not all discussed upon. After the amendment act 22, I am eligible to claim depreciation, which is going against the tenet of the revenue department, saying that when you are not able to expect the cost of the asset treated as the application, there is a question of computation being allowed, which is also part of the cost.
Sir, if they wanted to disallow the depreciation on the assets acquired out of corpus, they would have written it in the act in the same way. And then that means it is allowable. If they wanted to disallow, they would have written depreciation on all categories of assets is disallowed. They did not do that. They said depreciation on assets treated as application alone is not allowable. Only to that, why do you want to go and contradict a provision which is beneficial to you?
The process next 3 or 4 years, if I buy an electronic equipment, 3 or 4 years I will get rid of all the cost value by the computation.
Correct.
That is not the tenet of the act.
That is the tenet of the act.
Here there will be no application purpose, whether it is application or not. You claim it as an application, then there will be no purpose. So they want to spread out that cost to different years so that you get the benefit of depreciation as well as the return. And depreciation also is a non-cash item, whether it is allowed as expenditure. We are supposed to pay all claim expenditure only on the basis of payment.
depreciation is not expenditure, sir.
Allowance.
Depreciation is not expenditure.
Depreciation is an allowance, not an expenditure.
The only explanation to section 11, explanation 11.1 has got 5 explanations, 11.2 has got explanations, but for the entire section 11, there is only one explanation. That explanation says it is only the expenditure which is allowable on cash basis. Depreciation, there are different categories of allowance. You have allowance, you have expenditures, you have losses. These are all categories of items appearing on the debit side of your income and expenditure. So depreciation does not fit into the category of expenditure. It is only the expenditure which is to be tested for cash basis.
In our income tax law, it amounts to application. Depreciation though not treated as expenditure, it is amounts to application in the light of our 11 to 30. So when the application does not take care of the original cost of the value of the asset, what out of purpose and created during this, there is the question of depreciation being applied there.
Okay, don't apply, sir. You are only losing a benefit for yourself.
If you want to go, go. Department
Sir, I will tell you an example. Somebody asked the court this question. I am claiming depreciation. By claiming depreciation, my application is going beyond 100%. What should I do? This was the question that was put before the court. By claiming depreciation alone, my application was going beyond 100%. Can there be a possibility of going application beyond 100%? Logically, no. But by putting this depreciation, it was going beyond 100%. What should I do? This was a question that was put before the court. Court said, application beyond 85% is academic. I will not render a judgment. You need not hear it. Your whole purpose is what? You should spend 85% of the income. If you have spent, why should we discuss on an academic issue? This was the judgment of the court, not mine. So your issue, if you have claimed depreciation till 85%, the matter is over. You need not worry about it. What will happen? We can only interpret what is written in the act, sir. Their intentions we cannot discuss. They said depreciation is allowed only if the asset is not used as an application. To that extent, I will claim depreciation. If they want to restrict, let them put a sentence. We will treat it as not application.
Sir, there is no special treatment. Only in the computation, 15% will, in the balance sheet, 15%, 10% I will not appear. Assets will register some surplus assets, it will be represented by some assets. I'm Mikey. I'm Mikey. I'm voice in a question, Mike is just bog in a. Then I asked you to come front, you didn't come.
No, I had some difficulty in walking, sir.
If you come into front, no need of mic for me. Tell me.
Sir, in this 31 clause where we are talking about amount to be disallowed, there is some 13th item, sir. 13th item. In 31 clause 31 in the audit.
Please read that.
Yeah. It is talking about disallowance and it says donation to any person other than any
beyond
fund
the
or
act. Beyond that, it is really not there. It is only applicable. That particular line is applicable if section 1310 is invoked. Unfortunately, they have put it in application, which I said some of the contents of the form are beyond the act.
Beyond the act.
Yes, it is beyond the act.
Oh, okay. Thank you, sir.
Any other questions? See, our friend's question is, nowadays governments are giving fees reimbursement. It is nothing but scholarship you are calling. Fees reimbursement to some economically backward or this. Now it goes to directly to students. What should be the treatment? Is it the question, sir? You are right. No. Please.
Whatever demand is there, we will put in the student account. Student is certain amount has to be received from the government. Still that amount has not been government. What shall we do?
So the question restated, an educational institution has to receive the tuition fees from the students. Part of the tuition fees is reimbursed by the government. Part of the tuition fees is paid by the students. Both are on accrual basis. Due is there. Now, if the due is there, you are going by accrual system, your income. That income, not on cash basis, compute the income. It will become part of the income if you are following accrual system. Then, when applied, calculated, if you have a shortfall, that is expenditure applied is equal to revenue expenditure capital shortfall is there, then if that shortfall is more than 15%, because the accrual side not received, first limb of Form 9A, first limb of Form 9A says, in case your income is not received and it is income, you can file Form 9A stating in the year in which it is received, it will be applied. If you say without any further conditions, Form 9A you file within the statutory things, automatically you are eligible for exemption to that extent. This is the answer. So in the year in which the government gives to you, then you claim the normal expenditure. Sir, each year is a separate computation, sir. This year computation, this year in your balance sheet, 17-18 9-year filed receivable, 18-19 9-year receivable, maybe in third year the government may give. Third year if it gives, in the year in which you receive, you have to apply.
This doubt is very practical.
Well,
this year I have
9-year.
I am supposed to use it in the next year.
Correct.
Next year
Not immediate year. In the year in which you 9-year, if you read section, that's section 11(1), explanation 2. You are filing 9A stating immediate in the next year. No, second clause only in the immediate second year, immediate following year. 9A first clause is, in case the income is accrued but not received, if you are taking that plea and filing Form 9A, in the year in which you received only, you have to apply, not in the immediate following year. There are two types of 9A. That you read section 11(1), explanation 2.
But here another problem is application. They not get it because you might have already applied it. So you have to go for some capital expenditure.
Application word includes revenue and capital. It is up to you. Any other questions?
Then the same example, can we record fees from the cash basis and expenditure from the not expense?
Sir, because of amendment, changing from earlier accrual to cash system is permitted. Case laws are there. If you want, I will give the case. So if you feel that accrual system is troubling you, because income is accruing, I'm not able to do this. First 1 year itself, change from accrual to cash system. Then consistently you should follow the cash system. Because of the amendment, I have got to cash system. There should be a basis for changing the method of accounting. You changed the method of accounting. You have come to cash system. Continuously follow the cash system. So to the extent cash income, 85% you apply and be satisfied. Sir, section 199 TDS sections say TDS credit shall be taken only in the year in which relevant income is admitted as taxable as income. To the extent in the ITRs now, carry forward. In which it is income, that year only TDS should be there. Sir says, reverse form. What is the reverse form? Especially for chartered accountants. For the payer accrual system, recipient cash system is not a problem. For the payer cash system, receiver accrual system, reverse will happen. Bank audit, you will get appointment letter in April first week, assignment in April. The bank will provide that expenditure, claim the expenditure audit fees previous. They follow the accrual system for 23-24 assessment year. You follow the same thing, admit as income in 24-25. Then in our 23-24, this income is not received, expenditure not accrued, carry forward. Then second year, when you admit as income, claim the TDS. Easy. reverse. The other fellow is following a cash system, whereas I am following a accrual system. For example, works contractors from government. Whether the government is paying my bills or not, the moment I complete my expenditure, unnecessarily, why should I show in work in progress? I claimed the bill. Government, for want of money, does not pay. So my accrual system, I claimed the bill is a fact. On accrual, my bills receivable, income admitted. So expenditure admitted. No TDS. Whereas in the second year, third year, when the bill is released, government will deduct the TDS with not retrospect. In the year in which they pay, they deduct TDS. Then that year, where can I apply the income? That 199 will not come. That's why they changed this thing. Even then, earlier year, if you had admitted as income specifically, still the TDS can be claimed. That's the answer. Sir, chairman has come, Satish Kumar Mailavarapu. Please come, sir.
Members, any more doubts? Lord will be there. Last question with your permission, sir.
She is the highest questions.
Highest questions. We will collect double fees.
The audit report, that there are many cases where these NGOs are circulating their bank account details in social media. So randomly they keep getting credit in the bank statement, but if you ask them the details, the name, address, they're not in a position to provide. So are we supposed to put it in the bucket of amount?
Yeah.
Irrespective of the fact that it is received from the bank?
Yes. Yes.
Answer. The audit report is now not asking us to report on anonymous donations. Had it been a general clause, I would have said, collect the name and address using the mobile phone number that is located in your bank account, because they would have transferred through UPI. You would have a mobile number appearing in your bank account. So you could have tracked the name of that person. Name and address would have been sufficient as anonymous. Audit report is not restricting to the word anonymous. They have extended it to include Form 10B. They are saying on the basis of the information available in 10B, how much is the donation reported? How much is the donation not reported in 10B? To the extent not reported, you break it down into the different categories. When this is the scenario, your obligation definitely is increased because your assessee has not collected all the forms. There are two options available to you. If your assessee can collect at least in the next 1 month, you can revise an audit report, although it is not in accordance with Rule 6G. Rule 6G permits you to revise an audit report only for two circumstances, 43B, 40A, of which one is applicable for a charitable trust. In your case, Rule 6G would not apply, but still, if your assessee is able to collect all the data within 1 month from the date of the audit report, you can file a revised audit report and then file the return of income. But if your assessee is unable to collect all the information, you have no other option but to term it as anonymous. That need not be agreed by the assessee, but 143(1) intimation will make an adjustment which has to be contested before CIT appeals. Form? Yeah, if you can change the purposes for which you want to accumulate. Purposes, and that purpose within that amount you can interchange.
Actually, section 11, subsection 3A, section 11, subsection 3, capital A, specifically says for 21-22 assessment year, you filed Form 10, 5 years. Now in 23-24, I give the specific example. You filed for a hospital to create a blood bank. Now the present government passed a GO, no private blood banks, all government hospitals only shall have a blood bank. Impossibility of performance. Then how do you use that money? Within 5 years for the specific purpose. So the section 11.3 specifically says, whoever wants to revise the object, jurisdictional officer is given the power to permit such change in the form. Section itself says, you can go ahead. Come and conclude, sir. Please, time.
Thank you, sir, Palgun Kumar sir and Chaitanya sir, for accepting our request and addressing all of us. On behalf of Hyderabad branch of SIRCF ICA, we sincerely and with a lot of affection, we say big round of applause for showing our gratitude. Thank you for accepting our request also on immediate basis. When we requested sir, without any hesitation, he simply said, yes, I want to come to Hyderabad. Thank you for your love and affection on the members of Hyderabad, sir. Please keep on coming to Hyderabad and give your address. As a token of appreciation and gratitude, I request CA Banarendra Garu to present a memento to today's speaker, Palgun Kumar sir. Thank you, Banu sir.
Friends, it's really a privilege to present a memento to Sir, because we call him representative of Lord of Seven Hills. So it's like giving a memento to the Lord himself. And he is very crystal clear in the speciality of Palgun Kumar sir is he goes at a very slow pace, steady pace, mixes some humor, and he doesn't see the PowerPoint. The slide changes without looking at the slide, he will tell the content of the change slide. That is a very great thing which we all should learn.
It's all the affection of my colleagues who are sailing with me. Same day as more than 10 times I have come and presented the papers. As I remember, that's Chakrapani's year in which year?
2009, sir. 8-9, sir.
So 2008, on the same day as I presented the paper first time in the Hyderabad branch, 2008, on cooperative societies and taxation. On cooperative societies and taxation. So like the different topics on HUA per se, on real estate, so many topics we cover and we try to share. So more than 10 times in the past, I have some other place counting also is there with me. So more than 10 times. So what it shows, the Hyderabad branch magnetic port being the capital. So we are from a small place, this thing. So the affection, what we share, actually August, in the month of June, my date generally 2 months in advance, date wise, everything is will be fixed. Minimum 2 months in advance, dates will be freezed. In the June first week, Sunil Mandava called me and said, sir, August 15th, you should be at Nellore branch where I am ex officio. I will tell you. I said in 1 or 2 days, I ran back and said, yes, I am fixing August 12th because I have no other commitment somewhere else, being a holiday. So August 15th, I was there. He has come all the way from Hyderabad last month, August 15th. He sat through, today only he could not sit. 3 hours, 10 to 1:30, I think I sat through all the 3.5 hours. And Nellore, I got a lot of friends. So they all said, sir, this is the Charitable Trust, very good. After hearing that, Sunil said, sir, Hyderabad also one more round you can have. So because of Sunil's invitation, this program is fixed. You know, chairman should approve that Sunil has taken the initiative to bring me and my son. Actually, not two, another person is there, Shivaram Krishna. So I asked him, sir, shall we commit? Yes, yes, commit. He got his relative's marriage in Hyderabad only on 4th of September. Sir, for my marriage, my man quarter marriage, 5 days I am staying, so 8th I cannot. So the 3 persons got 2% having accepted to share. So we shifted these sections, clauses, this, that. So now we changed again 2%. So this is all the background. So the God-given opportunity, the affections and the sharing of knowledge is only God-given. So we are so indebted to the Hyderabad branch and to the God for giving us this opportunity. Thank you so much.
Thank you, Falgun sir, for your affectionate and lovable words towards Hyderabad and our Sunil sir. He the person behind this, what do you say, successful program. Thank you once again. I request C.S. Sunil Mandava, Treasurer SIRC, to present a memento to Chaitanya Garu, please.
First of all, I would already thank both of you, sir, Falgun sir and Chaitanya Garu, for accepting our great opportunity for our members to listen from your words of trust activities. But I know my partner is there, he listening. So I know the importance. So I brought him to listen, even though I listened 3 hours continuously of your session. After that, I told my partner to come and you have to listen this. So first of all, I will, on behalf of all Hyderabad branch members, I thank both of you for giving such a wonderful lecture on practical exposure of the 10B and 10BB. Thank you very much, sir. And on behalf of all of them, I thank you. A great opportunity. Thank you very much.
Thank you, Sunil sir. Once again, thanks to all the members and today's speakers. Thank you. We are signing off for the day. Yeah.